Question 1. Mr. Jones is a resident of Alabama and wants to purchase a long-term care insurance policy. According to Alabama's regulations, which of the following statements is most accurate regarding long-term care insurance policies? A. Mr. Jones cannot cancel the policy after the first 2 years. B. The policy must offer inflation protection benefits. C. The insurer can deny coverage based on pre-existing health conditions. D. The policy benefits must be guaranteed for life. The correct answer is C. The insurer can deny coverage based on pre-existing health conditions. According to Alabama Department of Insurance regulations, long-term care insurers are allowed to underwrite applicants and may deny coverage based on pre-existing health conditions, referenced in Chapter 42 of the Alabama Administrative Code. This is to ensure the financial viability of the policy for both the insurer and the policyholder. Question 2. While explaining Medicare supplement insurance benefits to Ms. Williams in Alabama, you, the insurance agent, mentioned that these plans can help pay for deductibles and coinsurance associated with Original Medicare, Parts A and B. Ms. Williams is concerned about covering the gaps in her Medicare coverage. Which of the following statements best describes Medicare supplement insurance plans in Alabama? A. These plans are standardized across all insurance companies in the state. B. Ms. Williams can choose any Medicare supplement plan regardless of her age. C. There are limitations on how much a Medicare supplement plan can pay for benefits. D. All Medicare supplement plans must cover prescription drugs. The correct answer is A. These plans are standardized across all insurance companies in the state. Medicare supplement insurance plans in Alabama are standardized under the National Association of Insurance Commissioners, NAIC, guidelines. This means plans with the same letter designation, e.g., Plan G, will offer identical benefits regardless of the insurance company, referenced in Alabama Code Section 271819. This allows for easier comparison between plans. Question 3. Mrs. Brown is a resident of Alabama and is considering purchasing a life insurance policy with a long face amount guarantee period. According to Alabama regulations, what is the minimum guaranteed face amount on a traditional whole life insurance policy issued in the state? A. The face amount is guaranteed for the first 10 years only. B. The guaranteed face amount applies throughout the entire policy period. C. There is no minimum guarantee period for face amount in Alabama. D. The face amount is guaranteed until the cash value reaches a certain level. The correct answer is B. The guaranteed face amount applies throughout the entire policy period. Alabama follows the standard life insurance model where traditional whole life insurance policies offer a guaranteed face amount throughout the entire policy period, as long as premiums are paid on time, referenced in Title 27 of the Alabama Code. This provides long-term death benefit security for the beneficiaries. Question 4. Ms. Hernandez is an insurance agent licensed in Alabama and is explaining accident and health insurance benefits to a client. According to the Alabama Department of Insurance regulations, which of the following statements is most likely considered a guaranteed issue health insurance policy in Alabama? A. A policy specifically designed for individuals with pre-existing conditions. B. A short-term health insurance plan offered for a limited period. C. An employer-sponsored group health plan with limited network options. D. A Medicare supplement insurance plan to cover Medicare gaps. The correct answer is A. A policy specifically designed for individuals with pre-existing conditions. Alabama adopted the Affordable Care Act, ACA, provisions requiring health insurers to offer guaranteed issue health plans to individuals regardless of their health status. Source: Kaiser Family Foundation. These plans are typically designed for those who cannot qualify for traditional health insurance due to pre-existing conditions. Question 5. Mr. Lee is a resident of Alabama and is considering purchasing a critical illness insurance policy. He is concerned about the financial burden if he is diagnosed with a critical illness. According to Alabama insurance regulations, what is not typically covered under a critical illness insurance policy? A. Hospitalization costs associated with the critical illness. B. Loss of income due to being unable to work because of the illness. C. Long-term care services needed after a critical illness diagnosis. D. The policy benefit payout upon diagnosis of a covered critical illness. The correct answer is C. Long-term care services needed after a critical illness diagnosis. Critical illness insurance policies in Alabama typically focus on providing a lump sum benefit payout upon diagnosis of a covered critical illness. This money can be used for various purposes, such as covering out-of-pocket medical expenses, replacing lost income, or debt repayment. Long-term care services are typically covered under separate long-term care insurance policies, referenced in Alabama Department of Insurance Consumer Guides. Question 6. Ms. Davis is an insurance agent licensed in Alabama and is explaining replacement of life insurance policies to a client. According to the Alabama Replacement Life Insurance Disclosure Act, which of the following statements is most accurate regarding the agent's responsibilities? A. The agent must obtain a signed waiver from the existing policyholder before soliciting a replacement policy. B. The agent only needs to disclose the benefits of the new policy. C. There is no requirement to disclose information about the existing policy. D. The agent must provide a written comparison of the new and existing policies. The correct answer is D. The agent must provide a written comparison of the new and existing policies. The Alabama Replacement Life Insurance Disclosure Act mandates that agents replacing existing life insurance policies disclose specific information to the client. This includes a written comparison of the benefits, premiums, cash values, and guarantees of both the existing and proposed new policies, referenced in Alabama Code Section 271822. This helps ensure informed decision-making by the client. Question 7. Ms. Carter is an insurance agent licensed in Alabama and is explaining individual health insurance policies to a client. According to the Alabama mandated health insurance reforms, which of the following is not a guaranteed issue condition for individual health insurance plans offered in the state? A. Pregnancy. B. Mental health conditions. C. Pre-existing medical conditions. D. Genetic predisposition to a disease. The correct answer is D. Genetic predisposition to a disease. The Affordable Care Act, ACA, and subsequent Alabama regulations require guaranteed issue for individual health plans, meaning insurers cannot deny coverage or charge higher premiums based on pre-existing medical conditions, referenced in Alabama Department of Insurance frequently asked questions. However, genetic predisposition to a disease is not considered a pre-existing condition and insurers may underwrite based on that information. Question 8. Mr. Garcia is a resident of Alabama considering purchasing a disability income insurance policy. He is concerned about maintaining his income if he becomes disabled due to an accident or illness. According to Alabama insurance regulations, which of the following statements is most accurate regarding disability income insurance benefits? A. Benefits are typically paid tax-free regardless of the cause of disability. B. The policy defines disability based on the insured's occupation. C. There is no waiting period before benefits begin after a disability. D. The benefit amount is guaranteed to increase over time. The correct answer is B. The policy defines disability based on the insured's occupation. Disability income insurance policies in Alabama typically define disability based on the insured's inability to perform the duties of their specific occupation, occupational disability. This ensures the benefits replace income lost due to being unable to work in their current field, referenced in National Association of Insurance Commissioners, Disability Income Insurance Shoppers Guide. Question 9. Ms. Brown is an insurance agent licensed in Alabama and is explaining Medicare Advantage plans to a client. According to Alabama Department of Insurance guidelines, which of the following statements is most likely true regarding Medicare Advantage plans? Part C. A. All Medicare Advantage plans must cover the same benefits as original Medicare. B. Beneficiaries can enroll in both a Medicare Advantage plan and a Medicare Supplement plan. C. There are no network restrictions associated with Medicare Advantage plans. D. Medicare Advantage plans are administered directly by the federal government. The correct answer is B. Beneficiaries can enroll in both a Medicare Advantage plan and a Medicare Supplement plan. Medicare Advantage plans in Alabama are offered by private insurance companies and provide an alternative way to receive Medicare benefits, referenced in Centers for Medicare and Medicaid Services, Medicare Advantage. Unlike original Medicare, these plans often have network restrictions and may require additional premiums. However, beneficiaries can enroll in both a Medicare Advantage plan and a Medicare Supplement plan to fill coverage gaps of the Advantage plan. Question 10. Ms. Lopez is an insurance agent licensed in Alabama and is explaining life insurance policy contestability to a client. According to Alabama Code, what is the typical contestability period for a life insurance policy issued in the state? A. 1 year from the policy issue date. B. 2 years from the policy issue date. C. The entire lifetime of the insured. D. There is no contestability period in Alabama. The correct answer is B. 2 years from the policy issue date. In Alabama, most life insurance policies have a 2-year contestability period after the policy issue date, referenced in Title 27 of the Alabama Code. During this period, the insurer can contest the policy based on material misrepresentations made on the application. This protects the insurer from fraudulent applications. After the contestability period expires, the insurer's ability to contest the policy becomes significantly limited. Question 11. Mr. Chen is a resident of Alabama considering purchasing a group health insurance plan through his employer. According to Alabama insurance regulations, which of the following statements is most accurate regarding group health insurance plans? A. Employers are required to offer group health insurance to all employees. B. There are no minimum participation requirements for employees to enroll in the plan. C. Insurers can deny coverage to individuals with pre-existing conditions under group plans. D. Premiums for group health plans are typically experience rated based on the group's claims history. The correct answer is D. Premiums for group health plans are typically experience rated based on the group's claims history. Employers in Alabama are not mandated to offer group health insurance plans to their employees. However, if they do offer a plan, it must comply with state and federal regulations. Unlike individual health plans, group plans cannot deny coverage or charge higher premiums based on pre-existing conditions due to the Affordable Care Act. Premiums for group health plans in Alabama are typically experience rated, meaning they are based on the group's claims history, referenced in Alabama Department of Insurance, employer-sponsored health insurance. This can result in higher premiums for groups with a higher frequency of claims. Question 12. Ms. Young is an insurance agent licensed in Alabama and is explaining annuities to a client. According to Alabama Department of Insurance guidelines, which of the following statements is most likely true regarding annuity surrender charges? A. Annuity surrender charges cannot exceed a certain percentage. B. Surrender charges typically apply for the entire life of the annuity. C. Annuity surrender charges are designed to encourage long-term investment. D. All annuities offered in Alabama have surrender charges. The correct answer is C. Annuity surrender charges are designed to encourage long-term investment. Annuity surrender charges are fees imposed by the insurance company if the policyholder withdraws money from the annuity before a specified period, usually several years. These charges are designed to discourage early withdrawals and ensure the insurer recoups its initial investment and administrative costs, referenced in National Association of Insurance Commissioners, Annuity Buyer's Guide. Surrender charges typically decline over time, eventually disappearing completely. However, not all annuities have surrender charges, with some offering withdrawal options with minimal fees. Question 13. Ms. Jones is an insurance agent licensed in Alabama and is explaining Medicare Supplement Insurance Plans, Medigap, to a client. According to Alabama Medigap regulations, which of the following statements is most likely incorrect regarding standardized Medigap plans? A. All standardized Medigap plans offered in Alabama have the same benefit names, e.g., Plan G. B. The benefits covered by each standardized Medigap plan can vary depending on the plan letter. C. Medigap plans can help pay for deductibles and coinsurance associated with original Medicare. D. Ms. Jones can recommend a specific Medigap plan to her client based on their needs. The correct answer is A. All standardized Medigap plans offered in Alabama have the same benefit names, e.g., Plan G. While standardized Medigap plans offered by different insurers in Alabama will have the same benefit names, e.g., Plan G, the insurance companies can set their own premiums for each plan, referenced in Alabama Department of Insurance, Medigap information. This allows for price comparison between insurers offering the same standardized plan. Question 14. Mr. Garcia is a resident of Alabama considering purchasing a term life insurance policy. He is concerned about the affordability of the premium over time. According to Alabama insurance regulations, which of the following statements is most accurate concerning term life insurance premiums? A. Term life insurance premiums typically remain level throughout the entire policy term. B. Term life insurance premiums are based on the insured's age and health at the time of application. C. Term life insurance premiums can increase if the insured develops a health condition during the term. D. Term life insurance policies in Alabama cannot be renewed after the initial term expires. The correct answer is B. Term life insurance premiums are based on the insured's age and health at the time of application. Term life insurance premiums in Alabama are typically based on the insured's age, health status, and the chosen term length at the time of application, referenced in National Association of Insurance Commissioners, Term Life Insurance Shopper's Guide. Unlike whole life insurance, term life premiums do not accumulate cash value and are not guaranteed to remain level throughout the term. Some term life policies offer the option to renew at the end of the term, but the premiums will be recalculated based on the insured's attained age and health at that time. Question 15. Ms. Brown is an insurance agent licensed in Alabama and is explaining replacement of health insurance policies to a client. According to the Alabama Replacement Health Insurance Disclosure Act, which of the following actions is most likely required by Ms. Brown before a replacement policy can be issued? A. Obtaining a signed authorization from the client's current healthcare provider. B. Providing a written comparison outlining the benefits and costs of both the existing and proposed plans. C. Collecting a cancellation fee for the existing health insurance policy. D. Enrolling the client in a mandatory cooling-off period before the replacement is finalized. The correct answer is B. Providing a written comparison outlining the benefits and costs of both the existing and proposed plans. The Alabama Replacement Health Insurance Disclosure Act mandates that agents replacing existing health insurance policies disclose specific information to the client in writing. This comparison document should outline the benefits, premiums, and any potential risks associated with both the existing and proposed new health insurance plans, referenced in Alabama Code Section 271822. This helps ensure informed decision-making by the client regarding the replacement of their current health insurance. Question 16. Ms. Hernandez is an insurance agent licensed in Alabama and is explaining life insurance policy exclusions to a client. According to Alabama insurance regulations, which of the following is typically excluded from most life insurance policies? A. Death by natural causes. B. Death by suicide within the first 2 years of the policy. C. Death due to war or acts of terrorism. D. Death benefits for minors. The correct answer is B. Death by suicide within the first 2 years of the policy. Most life insurance policies in Alabama exclude coverage for suicide within the first 2 years of the policy, referred to as the suicide exclusion period. This is to help prevent intentional misrepresentation on the application and potential financial loss for the insurer. After the 2-year period, death by suicide is typically covered under the policy. Question 17. Mr. Lee is a resident of Alabama considering purchasing a long-term care insurance policy. He is concerned about the eligibility requirements for benefits. According to Alabama regulations, which of the following statements is most accurate regarding eligibility for long-term care insurance benefits? A. Benefits are only payable if the insured requires nursing home care. B. There is a minimum number of activities of daily living, ADLs, the insured must be unable to perform to qualify for benefits. C. Long-term care insurance plans in Alabama do not require a cognitive impairment for benefit eligibility. D. Pre-existing health conditions will automatically disqualify someone from receiving long-term care benefits. The correct answer is B. There is a minimum number of activities of daily living, ADLs, the insured must be unable to perform to qualify for benefits. Long-term care insurance policies in Alabama typically define eligibility for benefits based on the inability to perform a certain number of activities of daily living, ADLs, without assistance. These ADLs may include bathing, dressing, eating, toileting, and transferring. This allows flexibility in the type of long-term care received, whether at home, an assisted living facility, or a nursing home, referenced in National Association of Insurance Commissioners, Long-Term Care Insurance Shopper's Guide. Question 18. Ms. Davis is an insurance agent licensed in Alabama and is explaining accident and health insurance policy cancellations to a client. According to Alabama Department of Insurance regulations, which of the following scenarios would most likely allow a policyholder to rescind, cancel, their accident and health insurance policy? A. The policyholder decides they no longer need the coverage. B. The insurance company raises the premiums during the policy period. C. The policyholder discovers a benefit exclusion they were not aware of at the time of purchase. D. The policyholder reaches a specific age mandated for policy termination. The correct answer is C. The policyholder discovers a benefit exclusion they were not aware of at the time of purchase. Alabama adopted regulations based on the Affordable Care Act rescission rights, allowing policyholders to rescind their accident and health insurance policies within a specific timeframe, typically 30 days, from the receipt of the policy documents, referenced in Centers for Medicare and Medicaid Services, Affordable Care Act and Individual Health Insurance Marketplace. This right to rescind allows for a review period to ensure the policy meets the individual's needs and there are no unexpected exclusions. Question 19. Ms. Lopez is an insurance agent licensed in Alabama and is explaining life insurance policy replacements to a client. According to the Alabama Replacement Life Insurance Disclosure Act, which of the following actions is most likely required by Ms. Lopez before a replacement policy can be issued? A. Obtaining written proof of the client's insurability for the new policy. B. Collecting a surrender charge from the existing life insurance policy. C. Providing a clear explanation of the potential consequences of replacing the current policy. D. Enrolling the client in a mandatory financial counseling session before moving forward. The correct answer is C. Providing a clear explanation of the potential consequences of replacing the current policy. The Alabama Replacement Life Insurance Disclosure Act mandates that insurance agents replacing existing life insurance policies disclose specific information to the client. This includes a clear explanation of the potential consequences of replacing the current policy, such as loss of benefits, higher premiums, or restarting the contestability period, referenced in Alabama Code Section 271822. This ensures informed decision-making by the client regarding the replacement of their existing life insurance. Question 20. Mr. Garcia is a resident of Alabama considering purchasing critical illness insurance. He is unsure if there is a waiting period before benefits are payable after a covered critical illness is diagnosed. According to Alabama insurance regulations, what is most accurate regarding the waiting period for critical illness insurance benefits? A. There is a mandatory waiting period in all critical illness insurance policies in Alabama. B. The waiting period for benefits varies depending on the specific critical illness diagnosed. C. Critical illness insurance benefits are typically payable immediately upon diagnosis. D. The waiting period is determined by the insurance company and is not regulated in Alabama. The correct answer is B. The waiting period for benefits varies depending on the specific critical illness diagnosed. Critical illness insurance policies in Alabama may have a waiting period before benefits are payable after a covered critical illness is diagnosed. The specific waiting period can vary depending on the policy provisions and the type of critical illness diagnosed, referenced in National Association of Insurance Commissioners, Critical Illness Insurance Shopper's Guide. Some illnesses may have no waiting period, while others may have a waiting period of 30, 60, or 90 days. Question 21. Ms. Brown is an insurance agent licensed in Alabama and is explaining Medicare Part D prescription drug coverage to a client. According to Alabama Department of Insurance guidelines, which of the following statements is most likely incorrect regarding Medicare Part D plans? A. Part D plans are offered by private insurance companies approved by Medicare. B. Enrollment in a Part D plan is mandatory for all beneficiaries with Medicare Part A or B. C. Part D plans typically have a formulary that lists covered medications. D. Beneficiaries may experience a coverage gap, donut hole, in their prescription drug coverage. The correct answer is B. Enrollment in a Part D plan is mandatory for all beneficiaries with Medicare Part A or B. Medicare Part D prescription drug coverage is optional for beneficiaries with Medicare Part A or B, Original Medicare. While enrolling in a Part D plan helps manage prescription drug costs, it is not mandatory. Referenced in Centers for Medicare and Medicaid Services, Medicare prescription drug coverage. Part D plans typically have formularies that list covered medications, and beneficiaries may experience a coverage gap, donut hole, where they are responsible for a higher share of the medication costs until they reach the out-of-pocket threshold. Question 22. Ms. Jones is an insurance agent licensed in Alabama and is explaining professional liability insurance, errors and omissions, to a client who is a healthcare provider. According to Alabama Department of Insurance regulations, which of the following statements is most accurate regarding professional liability insurance for healthcare providers? A. This type of coverage is mandatory for all licensed healthcare providers in Alabama. B. The policy typically covers legal defense costs associated with malpractice lawsuits. C. Professional liability insurance covers property damage caused by the healthcare provider. D. The minimum coverage amount required by the state is standardized for all healthcare professions. The correct answer is B. The policy typically covers legal defense costs associated with malpractice lawsuits. While professional liability insurance, errors and omissions, is not mandatory for all healthcare providers in Alabama, it is highly recommended for managing potential legal and financial risks. This type of insurance typically covers legal defense costs and settlements associated with malpractice lawsuits alleging negligence or errors in the delivery of care, referenced in Alabama Department of Insurance, Professional Liability Insurance. It's important to note that the policy details, including coverage limits and exclusions, can vary depending on the specific healthcare profession and the insurer. Question 23. Mr. Garcia is a resident of Alabama considering purchasing a disability income insurance policy. He is concerned about the financial impact if he becomes disabled due to an illness. According to Alabama insurance regulations, which of the following factors would most likely be considered when determining the benefit amount under a disability income insurance policy? A. The type of medical condition causing the disability. B. The insured's occupation and pre-disability income level. C. The total amount of premiums paid into the policy. D. The insured's age and life expectancy at the time of disability. The correct answer is B. The insured's occupation and pre-disability income level. Disability income insurance benefits in Alabama are typically calculated based on a percentage, often 60% or 70%, of the insured's pre-disability income. This ensures partial income replacement if the insured becomes disabled and unable to work in their current occupation, referenced in National Association of Insurance Commissioners' Disability Income Insurance Shopper's Guide. Factors such as the insured's age, occupation, and pre-disability income level are used to determine the monthly benefit amount and the maximum benefit period. The type of medical condition causing the disability may be considered in certain situations, but it's not the primary factor influencing the benefit amount. Question 24. Ms. Brown is an insurance agent licensed in Alabama and is explaining continuation of coverage options under COBRA to a client who is leaving their employer-sponsored health plan. According to the Consolidated Omnibus Budget Reconciliation Act, COBRA, which of the following statements is incorrect regarding COBRA continuation coverage? A. The qualified beneficiary has the right to elect COBRA continuation coverage for a limited period. B. The employer is not required to subsidize the COBRA premium cost. C. COBRA continuation coverage typically follows the same plan design as the group health plan. D. Ms. Brown can recommend choosing COBRA as the best continuation option for her client. The correct answer is D. Ms. Brown can recommend choosing COBRA as the best continuation option for her client. COBRA grants qualified beneficiaries, employees, spouses, and dependents the right to elect continuation coverage under the group health plan for a limited period, typically 18 or 36 months, after a qualifying event, such as job loss, referenced in U.S. Department of Labor, your health benefits under COBRA continuation coverage. However, Ms. Brown, as an insurance agent, cannot recommend COBRA as the best option. It's important for the client to compare the COBRA premium, which is not typically subsidized by the employer, with other options like individual health insurance plans or coverage under a new employer's plan before making a decision. Question 25. Ms. Hernandez is an insurance agent licensed in Alabama and is explaining life insurance policy grace periods to a client. According to Alabama insurance regulations, which of the following statements is most accurate regarding grace periods for life insurance premiums? A. The grace period is the time frame after the policy lapses during which the insured can reinstate the policy. B. The grace period allows the insured to pay a missed premium without penalty. C. The grace period is typically for a longer duration than the loan interest grace period. D. The Alabama Department of Insurance mandates a specific grace period length for all life insurance policies. The correct answer is B. The grace period allows the insured to pay a missed premium without penalty. A grace period is a defined timeframe after a premium due date during which the insured can pay the missed premium without the policy lapsing. This allows for some flexibility in case of late payments, referenced in National Association of Insurance Commissioners' Life Insurance Basics. The grace period duration can vary by policy, but it's typically 30 or 31 days. It's important to note that while a late fee may be applied during the grace period, the coverage remains active. The loan interest grace period, if applicable, refers to a separate timeframe for paying loan interest on a life insurance policy loan without incurring additional charges. The Alabama Department of Insurance does not mandate a specific grace period length, but it allows insurers flexibility within industry standards. Question 26. Mr. Lee is a resident of Alabama considering purchasing a Medicare Supplement Insurance Plan, Medigap. He is concerned about the costs associated with Medigap plans. According to Alabama Medigap regulations, which of the following factors would most likely not influence the premium amount for a Medigap plan? A. The specific benefits included in the plan letter, chosen by Mr. Lee. B. Mr. Lee's age at the time of enrollment in the Medigap plan. C. The health status or medical history of Mr. Lee. D. The insurance company offering the specific Medigap plan. The correct answer is C. The health status or medical history of Mr. Lee. Medicare supplement insurance plans, Medigap, in Alabama are standardized by federal law regarding benefits offered under each plan letter, e.g., Plan G. However, insurance companies can set their own premiums for these standardized plans, referenced in Alabama Department of Insurance, Medigap information. This allows for price comparison between insurers offering the same Medigap plan. An applicant's health status or medical history cannot be used to deny coverage or charge a higher premium for a standardized Medigap plan under the Affordable Care Act's guaranteed issue rights. Therefore, factors such as the chosen plan letter, Mr. Lee's age, and the insurance company offering the plan will influence the Medigap premium amount. Question 27. Ms. Davis is an insurance agent licensed in Alabama and is explaining individual health insurance policy renewal processes to a client. According to Alabama insurance regulations, which of the following statements is incorrect regarding the renewability of individual health insurance policies? A. Insurers are not required to renew an individual health insurance policy in Alabama. B. An insurer can non-renew a policy based on the policyholder's claims history. C. The insurer must provide written notification to the policyholder explaining the reason for non-renewal. D. Ms. Davis can advise her client to expect guaranteed renewability for their individual health insurance policy. The correct answer is D. Ms. Davis can advise her client to expect guaranteed renewability for their individual health insurance policy. Individual health insurance policies in Alabama are typically guaranteed issue in the first year, meaning insurers cannot deny renewal based on health status during that initial period. However, most individual health insurance policies are not guaranteed renewable beyond the first year, referenced in National Association of Insurance Commissioners, Understanding Health Insurance Renewals. Insurers have the right to non-renew an individual health policy after the guaranteed issue period, but they must follow specific state regulations. This may include providing written notice to the policyholder with a clear explanation for the non-renewal decision, such as non-payment of premiums, moving out of the insurer. Question 28. Ms. Jones is an insurance agent licensed in Alabama and is explaining health insurance policy rescission, cancellation, to a client. According to the Alabama Department of Insurance regulations and the Affordable Care Act, which of the following scenarios would most likely allow a policyholder to rescind their individual health insurance policy? A. The policyholder discovers a lower premium rate available with another insurer. B. The policyholder is unhappy with the network of healthcare providers covered by the plan. C. The policyholder unintentionally misrepresented their health status on the application. D. The policyholder reaches a specific age mandated for policy termination. The correct answer is C. The policyholder unintentionally misrepresented their health status on the application. The Affordable Care Act grants rescission rights to individual health insurance policyholders. This allows them to cancel the policy and receive a full premium refund within a specific timeframe, typically 30 days, from the receipt of the policy documents, referenced in Centers for Medicare and Medicaid Services, Affordable Care Act and Individual Health Insurance Marketplace. This right is particularly important in situations where the policyholder unintentionally misrepresented their health status on the application. It allows for a review period to ensure the policy meets the individual's needs and there are no unexpected coverage limitations due to misrepresentation. Age or being unhappy with the network are not reasons for rescission under the ACA. Discovering a lower premium with another insurer would likely fall under the policy cancellation terms outside of the rescission window. Question 29. Mr. Garcia is a resident of Alabama considering purchasing a Guaranteed Universal Life Insurance Policy, GUL. He is interested in the flexibility these policies offer. According to Alabama insurance regulations, which of the following statements is accurate regarding Guaranteed Universal Life Insurance policies? A. Guaranteed Universal Life Insurance policies offer a fixed minimum death benefit throughout the entire policy term. B. The cash value accumulation in a GUL policy is not guaranteed by the insurer. C. Policyholders can pay premiums beyond a certain point to stop premium payments while maintaining coverage. D. GUL policies are typically more expensive than traditional whole life insurance policies due to the guaranteed minimum death benefit. The correct answer is C. Policyholders can pay premiums beyond a certain point to stop premium payments while maintaining coverage. Guaranteed Universal Life Insurance, GUL, policies combine elements of whole life and universal life insurance. Similar to whole life, GUL policies offer a guaranteed minimum death benefit throughout the policy term. However, GUL policies also offer some flexibility like universal life. One such feature is the ability to pay premiums beyond a certain point to pay up the policy. This allows policyholders to stop paying premiums while maintaining coverage as long as the accumulated cash value is sufficient to cover policy expenses, referenced in National Association of Insurance Commissioners, Life Insurance Basics. This flexibility is not typically available in traditional whole life policies. GUL premiums may be comparable or slightly higher than whole life policies depending on the design and guaranteed features. Question 30. Ms. Brown is an insurance agent licensed in Alabama and is explaining Medicare Advantage, Part C, plans to a client. According to Alabama Department of Insurance guidelines, which of the following statements is incorrect regarding Medicare Advantage plans? A. Medicare Advantage plans are offered by private insurance companies approved by Medicare. B. Enrollment in a Medicare Advantage plan replaces traditional Medicare, Parts A and B. C. Most Medicare Advantage plans include coverage for hospitalization and physician services. D. Beneficiaries typically pay an additional premium on top of their Part B premium for a Medicare Advantage plan. The correct answer is B. Enrollment in a Medicare Advantage plan replaces traditional Medicare, Parts A and B. Medicare Advantage, Part C, plans are offered by private insurance companies as an alternative way to receive Medicare benefits. Enrolling in a Medicare Advantage plan replaces traditional Medicare, Parts A and B, coverage, with the Advantage plan becoming the primary source for covered services, referenced in Centers for Medicare and Medicaid Services, Medicare Advantage plans. These plans typically cover hospitalization, Part A, and physician services, Part B, along with potentially offering additional benefits such as vision, dental, or wellness programs. Beneficiaries typically pay an additional premium on top of their Part B premium to enroll in a Medicare Advantage plan. Question 31. Ms. Lopez, an insurance agent licensed in Alabama, is explaining accident insurance to a client. Mr. Hernandez is interested in a policy that would provide him with a cash benefit in case of a covered accidental injury. According to Alabama insurance regulations, which of the following statements is most likely accurate regarding accidental injury benefits in accident insurance policies? A. The benefit amount is typically a fixed dollar amount paid regardless of the severity of the injury. B. Benefits are only payable if the accident results in hospitalization for a minimum number of days. C. The policy may exclude coverage for certain high-risk activities like skydiving. D. Accident insurance policies are regulated by the Alabama Securities Commission. The correct answer is C. The policy may exclude coverage for certain high-risk activities like skydiving. Accident insurance policies provide a cash benefit in case of a covered accidental injury. The benefit amount can be a fixed dollar amount based on the severity of the injury, schedule of benefits, or a portion of the covered expenses, referenced in National Association of Insurance Commissioners, Accident Insurance. While some policies may require hospitalization for a minimum duration to qualify for benefits, it's not a universal requirement. Accident insurance policies typically exclude coverage for certain high-risk activities like skydiving or participation in extreme sports. Accident insurance is regulated by the Alabama Department of Insurance, not the Securities Commission. Question 32. Ms. Davis is an insurance agent licensed in Alabama and is explaining long-term care insurance options to a client. According to Alabama Department of Insurance guidelines, which of the following factors would most likely be considered when determining the appropriate long-term care insurance premium amount for an applicant? A. The applicant's current health status and age. B. The type of long-term care facility, e.g., nursing home, assisted living, the applicant prefers. C. The applicant's occupation and expected retirement age. D. The applicant's beneficiary designation on their life insurance policy. The correct answer is A. The applicant's current health status and age. The premium amount for long-term care insurance in Alabama is primarily determined by the applicant's age and health status at the time of application, referenced in National Association of Insurance Commissioners, Long-Term Care Insurance Shopper's Guide. Younger and healthier applicants typically qualify for lower premiums compared to older applicants or those with pre-existing health conditions. While the applicant's preferred long-term care facility type may influence their decision-making process, it generally does not directly affect the premium amount. Similarly, occupation, retirement age, and beneficiary designation on a life insurance policy are not considered for calculating long-term care insurance premiums. Question 33. Mr. Garcia is a resident of Alabama considering purchasing critical illness insurance. He is concerned about the definitions of covered critical illnesses within the policy. According to Alabama Department of Insurance regulations, which of the following statements is incorrect regarding critical illness insurance policies? A. The policy defines specific critical illnesses covered under the policy. B. The policy outlines the specific diagnostic criteria that must be met to qualify for a benefit payout. C. Critical illness insurance benefits are typically paid directly to the healthcare provider. D. Mr. Garcia can request a copy of the policy definition of covered illnesses before enrolling. The correct answer is C. Critical illness insurance benefits are typically paid directly to the healthcare provider. Critical illness insurance policies define specific critical illnesses covered under the policy, such as cancer, heart attack, or stroke, referenced in National Association of Insurance Commissioners, Critical Illness Insurance Shopper's Guide. Each covered illness has specific diagnostic criteria that must be met for the policy to pay a benefit. Critical illness insurance benefits are typically paid directly to the insured, not the healthcare provider. This allows the insured flexibility in how they utilize the funds to manage the financial impact of a critical illness. In Alabama, Mr. Garcia has the right to request a copy of the policy definition of covered illnesses and any exclusions before enrolling in a critical illness insurance plan. This allows for a clear understanding of coverage details before making a purchase decision. Question 34. Ms. Brown is an insurance agent licensed in Alabama and is explaining replacement of life insurance policies to a client. According to Alabama Department of Insurance regulations, which of the following statements is most likely accurate regarding replacement of life insurance policies? A. An insurer cannot deny a new life insurance application solely because the applicant is replacing an existing policy. B. The replacing insurer is required to automatically transfer the cash value from the old policy to the new policy. C. Replacement is generally discouraged due to potential lapse in coverage during the application process. D. Replacement is always recommended as newer policies typically offer better benefits. The correct answer is A. An insurer cannot deny a new life insurance application solely because the applicant is replacing an existing policy. An important concept in Alabama regarding replacement of life insurance policies is anti-replacement regulation. This regulation prohibits insurers from denying a new life insurance application or charging a higher premium solely because the applicant is replacing an existing policy, referenced in National Association of Insurance Commissioners, Replacing Life Insurance. This allows consumers to compare different policies and choose the one that best meets their needs. However, replacing a policy can have drawbacks. There may be a lapse in coverage during the application and approval process for the new policy. Additionally, the cash value transfer from the old policy to the new one may not be immediate and could incur surrender charges. Newer policies may not always offer better benefits. It depends on the individual's needs and the specific plans being compared. Question 35. Ms. Garcia is an insurance agent licensed in Alabama and is explaining health insurance claims to a client. According to Alabama insurance regulations, which of the following statements is incorrect regarding health insurance claims and the appeals process? A. The insured has the right to appeal a health insurance claim denial. B. The insurer must provide a written explanation for denying a claim. C. The external review process typically involves an independent third party. D. Ms. Garcia can directly represent her client during the external review process. The correct answer is D. Ms. Garcia can directly represent her client during the external review process. In Alabama, health insurance policies typically outline a process for appealing a claim denial, referenced in Alabama Department of Insurance, Consumer Resources. The insured has the right to appeal if they believe the claim was wrongly denied. The insurer must provide a written explanation for the denial, outlining the specific reasons for not covering the service or treatment. If the internal appeal within the insurance company is unsuccessful, the insured can initiate an external review process. This typically involves an independent third party, such as a medical professional or a state agency, who reviews the claim denial to determine fairness. Ms. Garcia, as the insurance agent, cannot directly represent her client during the external review process. However, she can guide the client through the appeals process and provide information on resources available. Question 36. Ms. Hernandez is an insurance agent licensed in Alabama and is explaining life insurance policy contestability to a client. According to the Alabama Department of Insurance regulations, what is the contestability period for a life insurance policy? A. The entire policy term. B. 2 years from the policy issue date. C. There is no contestability period in Alabama. D. The grace period for premium payments. The correct answer is B. 2 years from the policy issue date. The contestability period is a defined timeframe after a policy is issued during which the insurer can challenge the validity of the policy based on misrepresentations made in the application, referenced in National Association of Insurance Commissioners, Life Insurance Basics. In Alabama, this contestability period typically lasts for 2 years from the policy issue date. After this period, the insurer's right to contest the policy based on misrepresentation is generally limited. The entire policy term is not the contestability period. There is no contestability period for life insurance policies after the 2-year window. The grace period is for premium payments and is not related to contestability. Question 37. Mr. Lee is a resident of Alabama considering a Medicare supplement insurance plan, Medigap. He is concerned about the renewal process for Medigap plans. According to Alabama Medigap regulations, under what circumstances can an insurer non-renew a Medigap policy for an existing policyholder? A. The policyholder reaches a specific age mandated for policy termination. B. The policyholder files too many claims within a certain timeframe. C. The insurer discontinues offering that specific Medigap plan in Alabama. D. All of the above can be reasons for non-renewal of a Medigap policy. The correct answer is C. The insurer discontinues offering that specific Medigap plan in Alabama. Medicare supplement insurance plans, Medigap, in Alabama are guaranteed renewable for most policyholders, referenced in National Association of Insurance Commissioners, Understanding Health Insurance Renewals. This means the insurer cannot non-renew the policy solely because the policyholder files too many claims or reaches a specific age. However, there are exceptions. An insurer can non-renew a Medigap policy if the insurer discontinues offering that specific Medigap plan in Alabama for all policyholders. In this situation, the insurer must provide written notice to policyholders and offer alternative options under the Medicare Supplement Program. Options A and B are not valid reasons for non-renewal of an individual Medigap policy. Question 38. Ms. Davis is an insurance agent licensed in Alabama and is explaining health insurance policy exclusions to a client. According to Alabama insurance regulations, which of the following statements is most likely accurate regarding health insurance policy exclusions? A. Health insurance policies in Alabama cannot exclude any pre-existing conditions. B. Exclusions must be clearly outlined in the policy wording. C. Mental health treatment is always excluded from coverage in all Alabama health insurance plans. D. Cosmetic surgery is typically covered under most health insurance plans in Alabama. The correct answer is B. Exclusions must be clearly outlined in the policy wording. Health insurance policies in Alabama can exclude coverage for certain services or conditions, referenced in Alabama Department of Insurance, Individual Health Insurance. These exclusions must be clearly and conspicuously outlined in the policy wording, allowing the policyholder to understand what is and is not covered. The Affordable Care Act mandates that pre-existing conditions cannot be excluded from coverage in most individual and small group health insurance plans. Mental health treatment may or may not be excluded, depending on the specific plan design. However, the Mental Health Parity and Addiction Equity Act, MHPAEA, requires parity between mental health and medical, surgical benefits in certain group health plans. Cosmetic surgery is generally excluded from coverage in most health insurance plans in Alabama as it's considered elective and not medically necessary. Question 39. Ms. Jones is an insurance agent licensed in Alabama and is explaining life insurance policy dividends to a whole life policyholder. According to her explanation, dividends are not guaranteed. Mr. Garcia, the policyholder, is confused. He thought dividends were a guaranteed part of his whole life policy. Which of the following statements is most likely accurate regarding dividends in whole life insurance policies in Alabama? A. Dividends are a guaranteed return on the policyholder's premium payments. B. The insurance company is obligated to pay dividends on whole life policies. C. Dividends can be used to reduce premiums, purchase additional paid-up insurance, or be paid out in cash. D. Dividends are only available on term life insurance policies, not whole life. The correct answer is C. Dividends can be used to reduce premiums, purchase additional paid-up insurance, or be paid out in cash. Dividends in whole life insurance policies are not guaranteed by the insurer, referenced in National Association of Insurance Commissioners, Life Insurance Basics. While whole life policies participate in the company's profits, the insurance company has no obligation to pay dividends. The board of directors determines how much profit, if any, is distributed as dividends to policyholders. However, whole life policies offer the advantage of potential dividend payouts. These dividends can be used in various ways as outlined in the policy, such as reducing premiums, purchasing additional paid-up insurance, or receiving a cash payout. Dividends are not available on term life insurance policies, which are purely temporary coverage with no cash value accumulation. Question 40. Mr. Brown is a resident of Alabama considering a long-term care insurance policy. He is concerned about the potential for benefit limitations within the policy. According to Alabama Department of Insurance regulations, which of the following factors would most likely be considered when determining the daily benefit amount under a long-term care insurance policy? A. The applicant's age and health status at the time of application. B. The type of long-term care facility, e.g., nursing home, assisted living, the applicant prefers. C. The applicant's occupation and expected retirement age. D. The beneficiary designation on the applicant's life insurance policy. The correct answer is B. The type of long-term care facility, e.g., nursing home, assisted living, the applicant prefers. The daily benefit amount under a long-term care insurance policy in Alabama is primarily determined by the type of long-term care facility the policy covers, referenced in National Association of Insurance Commissioners, Long-Term Care Insurance Shopper's Guide. Nursing homes typically have higher daily costs compared to assisted living facilities. This is reflected in the daily benefit amount, with nursing home coverage offering a higher payout to help offset the higher expenses. The applicant's age and health status at application are considered for eligibility and premium amounts, not daily benefit amounts. Occupation, expected retirement age, and beneficiary designation on a life insurance policy are not directly relevant to the daily benefit amount in long-term care insurance. Question 41. Ms. Hernandez is an insurance agent licensed in Alabama and is explaining health insurance network restrictions to a client. According to Alabama insurance regulations, which of the following statements is incorrect regarding health insurance network restrictions? A. In-network providers typically have contracted rates with the insurance company. B. Out-of-network coverage may be subject to higher deductibles and coinsurance. C. Health insurance plans can require referrals to see specialists within the network. D. There are no network restrictions in Alabama health insurance plans. The correct answer is D. There are no network restrictions in Alabama health insurance plans. Many health insurance plans in Alabama utilize networks of healthcare providers who have contracted rates with the insurance company, referenced in National Association of Insurance Commissioners, Understanding Health Insurance Networks. In-network providers typically offer lower out-of-pocket costs for the policyholder compared to out-of-network providers. Out-of-network coverage may be subject to higher deductibles and coinsurance percentages, meaning the policyholder pays a greater portion of the healthcare costs. Some health insurance plans may require referrals from a primary care physician within the network to see specialists. There are exceptions, such as emergency care, where network restrictions may not apply. However, Alabama health insurance plans do have network restrictions, and understanding these limitations is crucial for cost-effective healthcare utilization. Question 42. Ms. Lopez, an insurance agent licensed in Alabama, is explaining Medicare options to a client approaching retirement age. Mr. Garcia is interested in Medicare Part D, which covers prescription drugs. According to Alabama Department of Insurance guidelines, which of the following statements is most likely accurate regarding Medicare Part D enrollment? A. Automatic enrollment occurs upon reaching retirement age. B. Enrollment is optional, with specific enrollment periods throughout the year. C. There are no premiums associated with Medicare Part D coverage. D. Benefits are standardized across all Medicare Part D plans in Alabama. The correct answer is B. Enrollment is optional, with specific enrollment periods throughout the year. Medicare Part D enrollment in Alabama is optional, not automatic, referenced in Medicare.gov, Medicare Prescription Drug Coverage, Part D. Individuals approaching retirement age or already receiving Medicare benefits have specific enrollment periods throughout the year to choose a Part D plan or make changes to existing coverage. There are no penalties for not enrolling in Part D, but a late enrollment penalty may apply if an individual enrolls later and has a gap in creditable prescription drug coverage. Part D plans have monthly premiums that vary depending on the plan chosen and the medications covered. Benefits are not standardized across all Part D plans. Each plan has a formulary, list of covered drugs, and may have different tiers with varying copayments or coinsurance for specific medications. Understanding these factors is crucial for choosing a plan that meets individual needs and budget. Question 43. Mr. Jones is a resident of Alabama considering critical illness insurance. He is concerned about the application process and potential health questions. According to Alabama Department of Insurance regulations, what factors can an insurance company not use to deny a critical illness insurance application based on health history? A. Pre-existing medical conditions. B. Age and family medical history. C. Information from credit reports. D. Height, weight, and lifestyle habits. The correct answer is C. Information from credit reports. Alabama Department of Insurance regulations prohibit the use of certain information in the application process for critical illness insurance, referenced in National Association of Insurance Commissioners, Critical Illness Insurance Shopper's Guide. While pre-existing medical conditions, age, and family medical history can be considered in the underwriting process, information from credit reports cannot be used to deny an application solely based on creditworthiness. Height, weight, and lifestyle habits may be considered during underwriting, but these factors alone cannot be the sole reason for denial. Question 44. Ms. Hernandez is an insurance agent licensed in Alabama and is explaining life insurance policy replacements to a client. Mr. Garcia is considering replacing an existing whole life policy with a term life policy. According to Alabama Department of Insurance regulations, what are some of the disadvantages of replacing a whole life policy with a term life policy? A. Term life policies typically offer lower premiums than whole life policies. B. Term life policies offer guaranteed death benefits throughout the entire policy term. C. Whole life policies lose all value if the policy lapses. D. Term life policies do not accumulate cash value over time. The correct answer is D. Term life policies do not accumulate cash value over time. While there can be advantages to replacing a whole life policy with a term life policy, such as lower premiums, there are also potential drawbacks to consider, referenced in National Association of Insurance Commissioners, Replacing Life Insurance. A key difference is the cash value component. Whole life policies accumulate cash value over time, which can be accessed through loans or withdrawals. Term life policies, on the other hand, do not accumulate cash value. They provide coverage for a specific term, e.g., 20 or 30 years, and if the insured outlives the term, the policy expires, and no cash value is returned. Question 45. Mr. Brown is a resident of Alabama considering a health insurance plan with a health savings account, HSA. HSAs offer tax advantages but may also have higher deductibles. According to Alabama Department of Insurance regulations, which of the following statements is incorrect regarding HSAs? A. Funds contributed to an HSA are typically tax deductible. B. HSAs can be used to pay for qualified medical expenses on a pre-tax basis. C. Unused funds in an HSA roll over year after year. D. HSAs can only be used with certain high-deductible health insurance plans. The correct answer is D. HSAs can only be used with certain high-deductible health insurance plans. Health savings accounts, HSAs, in Alabama offer several tax advantages when combined with a high-deductible health insurance plan, referenced in Internal Revenue Service.gov, Health Savings Accounts, HSAs. Contributions to an HSA are typically tax deductible, and funds can be used to pay for qualified medical expenses on a pre-tax basis. Unused funds in an HSA roll over year after year, allowing individuals to accumulate savings for future medical needs. However, HSAs are not compatible with all health insurance plans. They can only be used with certain high-deductible health insurance plans that meet IRS minimum deductible requirements. Question 46. Ms. Lopez is an insurance agent licensed in Alabama and is explaining the agent appointment process to a candidate. According to Alabama Department of Insurance regulations, which of the following statements is most likely accurate regarding the process of becoming a licensed insurance agent in Alabama? A. There are no pre-licensing education requirements for any line of insurance in Alabama. B. Individuals must pass a criminal background check before applying for the insurance license exam. C. The Alabama Department of Insurance administers all licensing exams for insurance producers. D. There is a one-time continuing education requirement to maintain an insurance license in Alabama. The correct answer is C. The Alabama Department of Insurance administers all licensing exams for insurance producers. The process of becoming a licensed insurance agent in Alabama involves several steps, referenced in Alabama Department of Insurance, agent licensing. Individuals must meet pre-licensing education requirements for the specific lines of insurance they wish to sell. They must also pass a criminal background check before applying for the insurance license exam. The Alabama Department of Insurance administers all licensing exams for insurance producers in the state. To maintain an insurance license in Alabama, agents are required to complete continuing education courses periodically, not just a one-time requirement. Question 47. Ms. Jackson, an insurance agent licensed in Alabama, is explaining life insurance policy riders to a client. Mr. Lee has a young family and is interested in adding a rider to his existing term life policy. According to Alabama Department of Insurance regulations, which of the following riders would be most beneficial for Mr. Lee's situation? A. Accidental death benefit rider. B. Guaranteed insurability rider. C. Waiver of premium rider. D. Paid up at age 65 rider. The correct answer is C. Waiver of premium rider. Riders are optional add-ons to a life insurance policy that provide additional benefits for an extra premium, referenced in National Association of Insurance Commissioners, Life Insurance Basics. Given Mr. Lee's situation with a young family, a waiver of premium rider would likely be the most beneficial option. This rider waives future premium payments if the insured becomes disabled and meets the rider's definition of disability. This helps ensure continued coverage for his family in case of disability without the financial burden of premium payments. Accidental death benefit riders provide an additional payout if the death is accidental, but they may not be as relevant to Mr. Lee's primary concern of ensuring ongoing financial protection for his family in case of any disability. Guaranteed insurability riders allow the policyholder to purchase additional coverage at guaranteed rates in the future, regardless of changes in health. While valuable, it may not be the most pressing need for Mr. Lee at this point. Paid up at age 65 riders focus on accumulating cash value that reaches a certain level by age 65, making the policy fully paid up with no further premiums required. This may not be the primary focus for Mr. Lee's current needs of protecting his family in case of disability. Question 48. Ms. Brown is a resident of Alabama considering a Medicare Advantage, Part C, plan. She is concerned about potential out-of-pocket costs associated with this type of plan. According to Alabama Department of Insurance guidelines, which of the following statements is accurate regarding out-of-pocket costs in Medicare Advantage plans? A. There are no out-of-pocket costs associated with Medicare Advantage plans. B. Medicare Advantage plans must follow the same Medicare billing rules as traditional Medicare. C. Out-of-pocket costs can vary depending on the specific Medicare Advantage plan chosen. D. All Medicare Advantage plans have the same annual deductible amount. The correct answer is C. Out-of-pocket costs can vary depending on the specific Medicare Advantage plan chosen. Medicare Advantage plans, Part C, offered by private insurers in Alabama are an alternative way to receive Medicare benefits, referenced in Medicare.gov, Medicare Advantage plans. Unlike traditional Medicare, where beneficiaries pay deductibles and coinsurance for covered services under Part A, hospital insurance, and Part B, outpatient medical insurance, Out-of-pocket costs in Medicare Advantage plans can vary depending on the plan chosen. Each plan has its own benefit structure, including deductibles, copayments, and coinsurance amounts for covered services. There may also be maximum out-of-pocket limits that apply after the beneficiary reaches a certain amount in covered expenses. Understanding these costs is crucial for choosing a Medicare Advantage plan that fits individual needs and budget. Question 49. Ms. Hernandez, an insurance agent licensed in Alabama, is explaining Medicare Supplement Insurance Plans, Medigap, to a client. Mr. Davis is concerned about the process of filing claims with a Medigap insurance company. According to Alabama Department of Insurance regulations, what is the general process for filing a claim with a Medigap insurance company? A. The policyholder submits the claim directly to the healthcare provider, and the provider bills both Medicare and the Medigap insurer. B. The policyholder submits the claim form and explanation of benefits, EOB, from Medicare to the Medigap insurer. C. Medigap insurance companies do not require any claim forms to be submitted. D. The healthcare provider submits the claim to both Medicare and the Medigap insurer electronically. The correct answer is B. The policyholder submits the claim form and explanation of benefits, EOB, from Medicare to the Medigap insurer. While the exact claim submission process may vary depending on the specific Medigap plan, generally, the policyholder initiates the claim process by submitting a claim form along with the explanation of benefits, EOB, received from Medicare, referenced in National Association of Insurance Commissioners, Medicare Supplement Insurance. The EOB details the portion covered by Medicare and any remaining out-of-pocket costs for the policyholder. The Medigap insurer then reviews the claim and EOB to determine the benefits payable under the Medigap plan for the remaining covered expenses. Option A applies in some instances, but typically, the policyholder is involved in initiating the claim. Option C is incorrect. Claim forms are usually required. Option D may occur in some cases, but the policyholder typically plays a role in initiating the claim. Question 50. Ms. Brown is a resident of Alabama considering an accident insurance policy. She is unsure if this type of insurance is regulated by the Alabama Department of Insurance. According to Alabama Department of Insurance regulations, which types of insurance are regulated by the department? A. Life insurance and accident insurance only. B. Health insurance and property and casualty insurance only. C. Life insurance, health insurance, and property and casualty insurance. D. Accident insurance and travel insurance only. The correct answer is C. Life insurance, health insurance, and property and casualty insurance. The Alabama Department of Insurance regulates various types of insurance products sold within the state, referenced in Alabama Department of Insurance, about the Alabama Department of Insurance. This includes life insurance, health insurance, and property and casualty insurance. Property and casualty insurance covers a wide range of areas such as auto, homeowners, and renters insurance. Accident insurance is typically considered a form of limited health insurance and would also fall under the regulatory purview of the Alabama Department of Insurance. Travel insurance may or may not be regulated depending on the specific product and its benefits. It's not universally regulated by all state insurance departments. Question 51. Mr. Garcia is an insurance agent licensed in Alabama and is explaining professional liability insurance, errors and omissions, E&O, to a client. A client inquires if an E&O policy would cover a data security breach within their business. Coverage can vary depending on the specific policy, but generally, what factors would be most important in determining whether a data security breach would be covered under a professional liability insurance policy? A. The size of the business and the number of employees. B. The cause of the data breach and the type of data compromised. C. The specific wording and exclusions within the E&O policy. D. Whether the business offers online services or operates solely in a physical location. The correct answer is C. The specific wording and exclusions within the E&O policy. Professional liability insurance, E&O, protects businesses from financial losses if a client sues them for negligence or errors and omissions in their professional services, referenced in National Association of Insurance Commissioners, Professional Liability Insurance. Whether a data security breach would be covered depends on the specific wording and exclusions within the E&O policy. Some policies may explicitly include or exclude coverage for data breaches and cyber liability. Factors such as the cause of the breach, the type of data compromised, e.g., customer financial information, and the resulting financial losses would be considered in determining coverage. Options A, B, and D may be relevant depending on the specific policy wording but are not the primary factors for determining coverage for a data security breach. Question 52. Ms. Jones, an insurance agent licensed in Alabama, is explaining mandated benefits for small employer health insurance plans to a client. Mr. Lee owns a small business and is considering group health insurance options for his employees. According to the Alabama Department of Insurance, which of the following benefits is not typically mandated to be covered in all small employer health insurance plans in Alabama? A. Hospitalization. B. Maternity and newborn care. C. Mental health services. D. Prescription drug coverage. The correct answer is D. Prescription drug coverage. The mandated benefits for small employer health insurance plans in Alabama are generally aligned with the federal requirements under the Affordable Care Act, ACA, referenced in Kaiser Family Foundation, Employer Health Benefits, and Overview. These mandated benefits typically include hospitalization, preventive care services, ambulatory patient services, maternity and newborn care, and mental health and substance use disorder services. Prescription drug coverage is not universally mandated for all small employer health insurance plans. While some plans may include it, it is not a federally mandated benefit for small group plans under the ACA. Employers can choose plans with or without prescription drug coverage, depending on their needs and budget. Question 53. Ms. Brown is a resident of Alabama considering a long-term care insurance policy. She is concerned about the potential for inflation and the rising cost of long-term care services. According to Alabama Department of Insurance regulations, what is one way long-term care insurance policies can help address the concern of inflation? A. Long-term care insurance policies cannot account for inflation. B. Some long-term care policies offer benefit increase riders. C. All long-term care policies automatically adjust benefits for inflation. D. The death benefit from a long-term care policy can be used to offset inflation. The correct answer is B. Some long-term care policies offer benefit increase riders. The rising cost of long-term care services is a valid concern for individuals considering long-term care insurance, referenced in National Association of Insurance Commissioners, Long-Term Care Insurance Shopper's Guide. While there is no guaranteed way to completely eliminate the impact of inflation, some long-term care insurance policies offer benefit increase riders. These riders allow the policyholder to increase their daily benefit amount periodically for an additional premium. This helps ensure the benefits keep pace with inflation to some extent, providing more coverage for future long-term care needs. Options A, C, and D are not accurate representations of how long-term care insurance addresses inflation. Question 54. Mr. Garcia is an insurance agent licensed in Alabama and is explaining life insurance contestability to a client. Ms. Hernandez is interested in purchasing a life insurance policy but is concerned about the possibility of the insurance company contesting the claim after her death. According to Alabama Department of Insurance regulations, what is the typical contestability period for a life insurance policy in Alabama? A. There is no contestability period. The insurance company can contest the claim anytime. B. The contestability period is 1 year from the policy issue date. C. The contestability period is 2 years from the policy issue date. D. The contestability period is generally 2 years after the insured's death. The correct answer is D. The contestability period is generally 2 years after the insured's death. The contestability period is a timeframe within which a life insurance company can investigate the validity of a life insurance policy and potentially contest the claim, referenced in National Association of Insurance Commissioners, Life Insurance Basics. In Alabama, the typical contestability period is generally 2 years after the insured's death. During this period, the insurance company may investigate factors such as misrepresentations on the application or material omissions of information. If the company discovers a reason to contest the claim within this timeframe, they may deny benefits. However, after the contestability period expires, the life insurance company's ability to contest the claim is generally limited, making the payout more certain for the beneficiaries. Question 55. Ms. Lopez, an insurance agent licensed in Alabama, is explaining health insurance exclusions to a client. Mr. Davis is concerned about coverage for a pre-existing condition. According to Alabama Department of Insurance regulations and federal mandates under the Affordable Care Act, ACA, can health insurance plans deny coverage or charge higher premiums based on pre-existing conditions? A. Yes, health insurance plans can deny coverage and charge higher premiums based on pre-existing conditions. B. Health insurance plans can deny coverage but cannot charge higher premiums based on pre-existing conditions. C. Health insurance plans cannot deny coverage but can charge higher premiums based on pre-existing conditions. D. Health insurance plans cannot deny coverage or charge higher premiums based on pre-existing conditions. The correct answer is D. Health insurance plans cannot deny coverage or charge higher premiums based on pre-existing conditions. The Affordable Care Act, ACA, introduced significant changes regarding pre-existing conditions, referenced in Kaiser Family Foundation. Key facts about the Affordable Care Act. Under the ACA and Alabama Department of Insurance regulations, health insurance plans cannot deny coverage or charge higher premiums based on pre-existing conditions. This is a major patient protection that ensures individuals with pre-existing medical conditions can access health insurance. Question 56. Ms. Brown is a resident of Alabama considering critical illness insurance. She is unsure about the difference between critical illness insurance and disability income insurance. According to Alabama Department of Insurance guidelines, how does critical illness insurance differ from disability income insurance? A. Critical illness insurance provides a lump sum benefit upon diagnosis of a covered critical illness, while disability income insurance provides income replacement if unable to work due to any illness or injury. B. Critical illness insurance covers a broader range of illnesses compared to disability income insurance. C. Disability income insurance benefits are typically paid tax-free, while critical illness insurance benefits are taxable. D. Critical illness insurance requires a longer waiting period before benefits are payable compared to disability income insurance. The correct answer is A. Critical illness insurance provides a lump sum benefit upon diagnosis of a covered critical illness, while disability income insurance provides income replacement if unable to work due to any illness or injury. Critical illness insurance and disability income insurance are both supplemental coverages that provide financial protection in specific situations, but they differ in their focus, referenced in National Association of Insurance Commissioners, Critical Illness Insurance Shoppers Guide and National Association of Insurance Commissioners, Disability Income Insurance Shoppers Guide. Critical illness insurance pays a lump sum benefit upon diagnosis of a covered critical illness, such as cancer, heart attack, or stroke. This benefit can be used for various expenses related to the illness, such as treatment costs, lost wages, or child care. Disability income insurance, on the other hand, replaces a portion of your income if you are unable to work due to any illness or injury, not just a critical illness. Benefits are typically paid monthly for a specified period or until retirement, depending on the policy terms. Option B is not necessarily true. Both may cover similar critical illnesses. Option C may vary depending on the specific policy and tax regulations. Option D may be true for some policies, but waiting periods can vary for both types of insurance. Question 57. Mr. Garcia is an insurance agent licensed in Alabama and is explaining grace periods for premium payments in life insurance policies. A client inquires about the grace period for a recently issued whole life policy. According to Alabama Department of Insurance regulations, what is the general function of a grace period in a life insurance policy? A. The grace period allows the policyholder to make changes to the beneficiary designation after the policy issue date. B. The grace period provides a time frame for the policyholder to pay a missed premium before the policy lapses. C. The grace period determines the amount of dividends the policyholder will receive each year. D. The grace period establishes the guaranteed death benefit amount payable by the insurer. The correct answer is B. The grace period provides a time frame for the policyholder to pay a missed premium before the policy lapses. The grace period in a life insurance policy is a time frame provided by the insurance company for the policyholder to pay a missed premium before the policy lapses, referenced in National Association of Insurance Commissioners, Life Insurance Basics. This allows for some flexibility in case of unexpected financial difficulties or simply forgetting a payment due date. The specific grace period length can vary depending on the policy type and state regulations, but it's typically 30 or 31 days from the due date. During the grace period, the policy remains active and coverage continues. However, if the premium is not paid within the grace period, the policy lapses and coverage may be terminated. Option A is typically allowed outside the grace period. Option C is related to dividend-paying policies but not the grace period. Option D is determined by the policy face amount and not the grace period. Question 58. Ms. Hernandez is a resident of Alabama considering a disability income insurance policy. She is unsure about the different benefit payment options available. According to Alabama Department of Insurance guidelines, which of the following best describes the concept of an own occupation disability benefit in a disability income insurance policy? A. Benefits are paid if the insured becomes disabled and cannot perform any work. B. Benefits are paid if the insured becomes disabled and cannot perform the duties of their specific occupation. C. Benefits are paid if the insured becomes disabled and their income falls below a certain threshold. D. Benefits are paid if the insured becomes disabled for a short-term period only. The correct answer is B. Benefits are paid if the insured becomes disabled and cannot perform the duties of their specific occupation. Disability income insurance policies offer financial protection if the insured becomes disabled and unable to work, referenced in National Association of Insurance Commissioners, Disability Income Insurance Shopper's Guide. There are different benefit payment options to consider. An own occupation disability benefit focuses on the insured's specific occupation. If the insured becomes disabled and cannot perform the substantial and material duties of their specific occupation, even if they could perform other types of work, benefits would be triggered under this definition. This provides a more comprehensive safety net for individuals whose disability prevents them from continuing in their chosen field. Option A is a broader definition of disability, but not specific to occupation. Option C may be an option for some policies but doesn't directly relate to own occupation. Option D refers to benefit duration, not the definition of disability. Question 59. Mr. Garcia, an insurance agent licensed in Alabama, is explaining replacement of individual health insurance plans to a client. Ms. Jones is considering switching from her current high-deductible health plan, HDHP, to a preferred provider organization, PPO, plan. According to Alabama Department of Insurance regulations, what factors should Ms. Jones consider when making a decision to replace her HDHP with a PPO plan? A. PPO plans typically offer lower deductibles but may have higher monthly premiums compared to HDHPs. B. PPO plans offer more flexibility in choosing network providers compared to HDHPs, but may require referrals for seeing specialists. C. HDHPs allow contributions to a health savings account, HSA, for qualified medical expenses, while PPO plans generally do not. D. All of the above factors are important to consider. The correct answer is D. All of the above factors are important to consider. Choosing between an HDHP and a PPO plan involves weighing several factors, referenced in Centers for Medicare and Medicaid Services, choosing a health plan. Cost. PPO plans typically have lower deductibles but may have higher monthly premiums compared to HDHPs. This can impact overall healthcare costs depending on how often you anticipate needing medical services. Network flexibility. PPO plans offer more flexibility in choosing network providers compared to HDHPs. You can see in network providers for lower costs, but you can also go out of network with potentially higher costs. HDHPs may require referrals for seeing specialists within the network. Health Savings Account, HSA, compatibility. HDHPs are often paired with HSAs, which allow contributions for qualified medical expenses on a pre-tax basis. This can be a significant tax advantage, but it requires using your own funds up front until the deductible is met. Considering all these factors, cost, network flexibility, and HSA compatibility will help Ms. Jones decide which plan best suits her individual needs and budget. Question 60. Mr. Lee is an insurance agent licensed in Alabama and is explaining life insurance policy contestability to a client. Ms. Hernandez is interested in purchasing a life insurance policy but is concerned about the possibility of the insurance company denying the claim after her death based on misrepresentations on the application. According to Alabama Department of Insurance regulations, what is the contestability period for a life insurance policy in Alabama? A. There is no contestability period. The insurance company can contest the claim anytime. B. The contestability period is 1 year from the policy issue date. C. The contestability period is typically 2 years from the policy issue date. D. The contestability period is 5 years from the policy issue date. The correct answer is C. The contestability period is typically 2 years from the policy issue date. The contestability period is a timeframe within which a life insurance company can investigate the validity of a life insurance policy and potentially contest the claim, referenced in National Association of Insurance Commissioners, Life Insurance Basics. During this period, the insurance company may investigate factors such as misrepresentations on the application or material omissions of information. If the company discovers a reason to contest the claim within this timeframe, they may deny benefits. However, after the contestability period expires, the life insurance company's ability to contest the claim is generally limited, making the payout more certain for the beneficiaries. In Alabama, the contestability period is typically 2 years from the policy issue date. Question 61. Ms. Brown is a resident of Alabama considering a long-term care insurance policy. She is concerned about the affordability of premiums over time. According to Alabama Department of Insurance regulations, what is one factor that can contribute to increasing long-term care insurance premiums over time? A. The policyholder's age at the time of policy purchase. B. The inflation rate and rising costs of long-term care services. C. The specific benefits and coverage options chosen in the policy. D. All of the above factors can contribute to increasing long-term care insurance premiums over time. The correct answer is D. All of the above factors can contribute to increasing long-term care insurance premiums over time. Several factors can contribute to increasing long-term care insurance premiums over time, referenced in National Association of Insurance Commissioners, Long-Term Care Insurance Shopper's Guide. Policyholder's age. Younger applicants typically qualify for lower premiums compared to older applicants due to the lower likelihood of needing care immediately. Inflation. The cost of long-term care services generally rises with inflation. Some policies may offer benefit increase riders to help offset inflation and ensure adequate coverage in the future, but these riders typically come at an additional premium cost. Benefits chosen. Policies with more comprehensive benefits, such as longer benefit periods or higher daily benefit amounts, will generally have higher premiums compared to plans with more limited coverage. By understanding these factors, Ms. Brown can make informed decisions about the affordability of long-term care insurance and choose a plan that fits her budget and long-term care needs. Question 62. Mr. Garcia is an insurance agent licensed in Alabama and is explaining mandated benefits for small employer health insurance plans to a client. Ms. Jones owns a bakery with 15 employees and is considering offering group health insurance. According to the Alabama Department of Insurance and federal mandates under the Affordable Care Act, ACA, which of the following benefits is not typically mandated to be covered in all small employer health insurance plans in Alabama? A. Hospitalization for inpatient care. B. Maternity and newborn care. C. Preventive care services. D. Prescription drug coverage. The correct answer is D. Prescription drug coverage. The mandated benefits for small employer health insurance plans in Alabama are generally aligned with the federal requirements under the Affordable Care Act, ACA, referenced in Kaiser Family Foundation, Employer Health Benefits, and Overview. These mandated benefits typically include essential health services such as hospitalization for inpatient care, ambulatory patient services, maternity and newborn care, mental health and substance use disorder services, preventive care services, including immunizations and screenings. Prescription drug coverage is not universally mandated. Question 63. Mr. Jones is a resident of Alabama and wants to purchase a long-term care insurance policy. According to Alabama's mandated benefits for long-term care insurance, which of the following services is not covered? A. Home health care. B. Adult day care. C. Nursing home care. D. Hospice care. The correct answer is D. Hospice care. Alabama Department of Insurance mandates specific benefits for long-term care insurance policies sold in the state. These benefits include home health care, adult day care, and nursing home care. Hospice care is typically excluded from long-term care insurance as it focuses on end-of-life care, while long-term care insurance is intended for chronic or extended care needs. Reference: Alabama Department of Insurance, Long-Term Care Insurance. Question 64. Ms. Lee is a life insurance agent licensed in Alabama and is explaining replacement of life insurance policies to a client. According to the Alabama Replacement Life Insurance Act, which of the following statements is most accurate regarding informing the policyholder of their rights? A. Ms. Lee only needs to provide the policyholder with a disclosure form upon request. B. Ms. Lee must explain the policyholder's right to cancel the new policy within 10 days but does not need to provide written notice. C. Ms. Lee needs to deliver a written notice outlining the right to return the new policy and receive a full refund within 20 days of delivery. D. Ms. Lee can replace the existing policy without informing the policyholder of their rights. The correct answer is C. Ms. Lee needs to deliver a written notice outlining the right to return the new policy and receive a full refund within 20 days of delivery. The Alabama Replacement Life Insurance Act protects policyholders from pressured replacement of life insurance policies. Licensed agents must deliver a written notice explaining the right to return the new policy and receive a full refund within 20 days of delivery. This notice informs the policyholder of their options and allows them to make an informed decision. Reference: Alabama Replacement Life Insurance Act. Question 65. An Alabama health insurance policy covers a prescription drug benefit. The policy has a copayment of $20 for Tier 1 generic drugs and $50 for Tier 2 brand name drugs. The insured individual needs a medication listed on Tier 2, but a generic alternative is available on Tier 1. According to Alabama's prescription drug formulary rules, which of the following statements is true? A. The insured can only get the Tier 2 brand name drug and pay the $50 copay. B. The insured can request the generic alternative and pay the lower $20 copay. C. The Alabama Department of Insurance mandates coverage for all listed drugs on a formulary. D. The pharmacy can substitute the generic alternative without the insured's consent. The correct answer is B. The insured can request the generic alternative and pay the lower $20 copay. Most Alabama health insurance policies with prescription drug coverage utilize a formulary. This is a list of covered medications categorized by tiers with different copay amounts. In this scenario, the insured can request the generic alternative on Tier 1 and pay the lower copay. Alabama allows for this option, promoting cost-effective medication choices for policyholders. Reference: National Association of Insurance Commissioners, NAIC, Formulary Management. Question 66. Ms. Garcia is a resident of Alabama and is considering purchasing a critical illness insurance policy. As a licensed agent explaining the policy, which of the following statements is most accurate regarding benefits payout in Alabama? A. The policy will pay a lump sum benefit upon diagnosis of any critical illness. B. Benefits are paid regardless of the insured's survival after diagnosis. C. The policy defines covered critical illnesses and pays only upon meeting those specific criteria. D. Alabama mandates a minimum set of critical illnesses that all policies must cover. The correct answer is C. The policy defines covered critical illnesses and pays only upon meeting those specific criteria. Critical illness insurance policies in Alabama are not standardized. While they offer a lump sum benefit upon diagnosis of a critical illness, the policy itself defines which illnesses are covered. It's crucial for the insured to understand the specific covered conditions and their definitions within the policy. Alabama does not mandate a minimum set of covered illnesses, so careful review of the policy details is essential. Reference: National Association of Insurance Commissioners, NAIC, Critical Illness Insurance. Question 67. Mr. Khan is a life insurance agent licensed in Alabama and is presenting different types of life insurance products to a client. Which of the following statements about universal life insurance, UL, in Alabama is false? A. Universal life policies in Alabama typically offer a flexible premium payment structure. B. A portion of the UL premium in Alabama accumulates cash value that can be accessed through loans or withdrawals. C. Guaranteed minimum death benefit is a characteristic of all UL policies sold in Alabama. D. The cash value accumulation in an UL policy in Alabama can impact the available death benefit. The correct answer is C. Guaranteed minimum death benefit is a characteristic of all UL policies sold in Alabama. Universal life insurance offers flexibility in premiums and cash value accumulation. A portion of the premium goes towards the death benefit, and the remaining amount builds cash value. This cash value can be accessed through loans or withdrawals. Unlike whole life insurance, universal life policies in Alabama do not inherently come with a guaranteed minimum death benefit. The death benefit amount can be reduced if the cash value falls below a certain level. Reference: National Association of Insurance Commissioners, NAIC, Universal Life Insurance. Question 68. Ms. Brown is an agent in Alabama who just received a complaint from a client about a rescission of their health insurance policy. The client states they were unaware of a pre-existing condition exclusion. According to Alabama's health insurance regulations, what is the maximum time period an insurer has to rescind a policy based on misrepresentation on the application? A. 30 days from the policy issuance date. B. 1 year from the policy effective date. C. During the contestable period outlined in the policy. D. There is no time limit for rescission due to misrepresentation. The correct answer is C. During the contestable period outlined in the policy. Rescission refers to an insurer's right to cancel a policy if the insured misrepresented information on the application. Alabama follows the contestable period outlined in the policy for rescission due to misrepresentation. This period is typically 1 or 2 years from the policy issue date. If the insurer discovers misrepresentation after the contestable period expires, they generally cannot rescind the policy. Reference: Alabama Department of Insurance, Health Insurance. Question 69. Mrs. Davis is a resident of Alabama considering a Medicare supplement policy, Medigap. She is concerned about the out-of-pocket costs associated with original Medicare. According to Alabama Medigap regulations, which of the following statements is true regarding benefits for Medicare Part B coinsurance? A. All Medigap plans sold in Alabama must fully cover Medicare Part B coinsurance. B. Mrs. Davis can choose a Medigap plan in Alabama that pays a specific percentage of her Part B coinsurance. C. Medigap plans cannot cover any deductibles associated with Medicare Part B. D. There is no standardized benefit structure for Medigap plans in Alabama. The correct answer is B. Mrs. Davis can choose a Medigap plan in Alabama that pays a specific percentage of her Part B coinsurance. Medicare supplement plans, Medigap, are standardized federally with specific plan options, Plan A, B, C, D, etc. However, some states may have additional regulations. In Alabama, Medigap plans offer varying levels of coverage for Medicare Part B coinsurance. Mrs. Davis can choose a plan that pays a specific percentage, e.g., 75% or 100% of the remaining coinsurance amount she owes after Medicare pays its share. Reference: Medicare.gov, Medigap plans. Question 70. Mr. Hernandez is a life insurance agent licensed in Alabama and is explaining life insurance policy options to a client. The client inquires about the difference between a term life insurance policy and a whole life insurance policy. Which of the following statements most accurately describes the key characteristic differentiating these two policy types? A. Term life insurance offers lifetime coverage, while whole life offers a set term period. B. Term life insurance accumulates cash value, while whole life does not. C. Term life insurance premiums are typically level throughout the policy term, while whole life premiums may increase over time. D. Term life insurance offers a guaranteed death benefit, while whole life benefits are not guaranteed. The correct answer is A. Term life insurance offers lifetime coverage, while whole life offers a set term period. The key difference between term life and whole life insurance lies in the coverage period and cash value accumulation. Term life insurance offers coverage for a specific period, e.g., 10, 20, or 30 years, and typically has level premiums throughout the term. It does not accumulate cash value. Whole life insurance, on the other hand, provides coverage for the insured's lifetime as long as premiums are paid. It accumulates cash value over time, which can be accessed through loans or withdrawals. Reference: National Association of Insurance Commissioners, NAIC, Life Insurance Basics. Question 71. Ms. Lee is a resident of Alabama and is considering purchasing a long-term care insurance policy. According to the National Association of Insurance Commissioners, NAIC, model long-term care insurance definitions, which of the following activities would qualify as needing assistance with at least 2 activities of daily living, ADLs, for long-term care insurance benefits to be triggered? A. Bathing and dressing oneself. B. Managing medications and finances. C. Shopping and preparing meals. D. Housekeeping and laundry. The correct answer is A. Bathing and dressing oneself. The NAIC model defines activities of daily living, ADLs, as essential tasks needed for daily living. These typically include bathing, dressing, eating, toileting, and transferring. moving from a bed to a chair, for example. For long-term care insurance benefits to be triggered, assistance may be needed with a set number of ADLs, usually 2 or 3, due to cognitive impairment or physical limitations. In this scenario, needing help with both bathing and dressing would likely qualify for benefits under most Alabama long-term care insurance policies. Reference: National Association of Insurance Commissioners, NAIC, Long-Term Care Insurance. Question 72. Mr. Hernandez is a health insurance agent licensed in Alabama and is explaining health insurance policy renewals to a client. According to Alabama regulations, which of the following statements is true regarding guaranteed renewal rights for individual health insurance policies? A. The insurance company can non-renew an individual health insurance policy based on the policyholder's age or health status. B. An Alabama resident can be guaranteed renewal as long as they pay their premiums on time. C. Guaranteed renewal only applies to health insurance plans offered through employers. D. The guaranteed renewal offer must be presented to the policyholder in writing before the policy expires. The correct answer is B. An Alabama resident can be guaranteed renewal as long as they pay their premiums on time. Alabama follows the guaranteed renewal provisions outlined in the Affordable Care Act, ACA, for individual health insurance policies. This means an insurance company generally cannot non-renew an individual policy as long as the insured pays their premiums on time. The policy remains in effect even if the policyholder's health condition changes. Reference: Kaiser Family Foundation, Health Reform, the ACA Individual Mandate. Question 73. Ms. Garcia is an agent in Alabama who is presenting Medicare Advantage, MA, plans to a client. The client inquires about the network requirements of MA plans. According to Alabama regulations, which of the following statements is most accurate regarding provider networks in Medicare Advantage plans? A. Every Medicare Advantage plan offered in Alabama must be an HMO plan with a limited provider network. B. Some MA plans, like HMOs and PPOs, have network restrictions, while others, like Medicare Savings Accounts, MSAs, do not. C. There is no difference between the provider network access offered by original Medicare and Medicare Advantage plans in Alabama. D. All MA plans require referrals from a primary care physician, PCP, to see specialists. The correct answer is B. Some MA plans, like HMOs and PPOs, have network restrictions, while others, like Medicare Savings Accounts, MSAs, do not. Medicare Advantage plans offer an alternative way to receive Medicare benefits. There are different plan types, HMO, PPO, etc., with varying network requirements. HMO plans typically have a limited network of providers, while PPO plans offer more flexibility with a broader network but may require referrals for specialists. Medicare Savings Accounts, MSAs, are a type of MA plan with a high-deductible health plan paired with a savings account to pay for healthcare costs. Network requirements can vary depending on the specific MSA plan. Unlike Original Medicare, Parts A and B, some MA plans may require referrals to see specialists. Reference: Medicare.gov, Medicare Advantage plans. Question 74. Ms. Brown is a resident of Alabama considering purchasing accident insurance. She is unsure about the benefits offered by accident insurance compared to her existing health insurance plan. Which of the following statements best describes the typical coverage provided by accident insurance in Alabama? A. Accident insurance is a primary form of health insurance that replaces an existing health plan. B. Accident insurance is supplemental insurance that provides benefits for specific expenses resulting from accidents. C. All accident insurance policies sold in Alabama cover lost wages due to missed work after an accident. D. Accident insurance premiums in Alabama are regulated by the state and cannot vary between companies. The correct answer is B. Accident insurance is supplemental insurance that provides benefits for specific expenses resulting from accidents. Accident insurance is a supplemental insurance product designed to provide financial protection for specific expenses incurred due to accidents. It is not a replacement for a comprehensive health insurance plan. Benefits may include coverage for medical bills, lost wages, or accidental death benefits. The specific coverage details and exclusions will vary depending on the chosen policy. Accident insurance premiums in Alabama are not set by the state and can differ between companies based on factors like age, occupation, and benefit level. Reference: National Association of Insurance Commissioners, NAIC, Accident Insurance. Question 75. Mr. Davis is a life insurance agent licensed in Alabama and is meeting with a client interested in increasing their life insurance coverage. The client currently has a term life insurance policy nearing its expiration date. Mr. Davis is explaining different life insurance options. Which of the following statements most accurately describes the impact of the client's age on available life insurance options and premiums? A. There is no difference in available life insurance options, term or whole, based on the client's age in Alabama. B. The client's age in Alabama will not affect the premium cost for a new term life insurance policy. C. Due to the client's age, they may no longer be eligible for certain types of life insurance, like term life, in Alabama. D. While the client's age will impact premiums, they will still have a variety of life insurance options available in Alabama. The correct answer is D. While the client's age will impact premiums, they will still have a variety of life insurance options available in Alabama. Age is a significant factor influencing life insurance eligibility and premiums. While there may not be an age cutoff for all life insurance products in Alabama, the client's age will likely affect the availability and affordability of term life insurance compared to a younger applicant. Term life insurance premiums are typically based on the insured's age and health status, with premiums increasing as the insured ages. Whole life insurance, on the other hand, may still be an option, but premiums will also be higher due to the applicant's age. Reference: Life Happens, Life Insurance Basics. Question 76. Mr. Jones is a resident of Alabama and wants to purchase a life insurance policy with a long-term care rider. According to Alabama Department of Insurance regulations, which of the following statements is most accurate regarding long-term care riders on life insurance policies? A. The long-term care benefits cannot exceed the death benefit of the life insurance policy. B. The life insurer can deny a claim for long-term care benefits if the policyholder fails to pay premiums on the life insurance policy. C. The insured cannot assign the long-term care benefits to another person. D. All of the above. The correct answer is D. All of the above. Alabama Department of Insurance adopts model regulations set by the National Association of Insurance Commissioners, NAIC, for long-term care insurance. These regulations aim to protect consumers by ensuring transparency and outlining specific requirements for long-term care riders. Benefit Maximum. Alabama Administrative Code Chapter the 19th of May 490.03, b, restricts long-term care benefits on life insurance policies not to exceed the death benefit. Claim Denial. Following Alabama Code Section 27136, the life insurer can deny a claim for long-term care benefits if the policyholder fails to pay premiums on the entire life insurance policy, as the rider is dependent on the base policy. Assignment Restrictions. Alabama Code Section 271332 limits the ability to assign benefits under life insurance policies, including long-term care riders, without the insurer's consent. Question 77. Ms. Lee is a licensed life insurance agent in Alabama and is explaining Medicare supplement insurance options to a client. While discussing benefits, which of the following statements by Ms. Lee would be a violation of the Alabama Department of Insurance's advertising regulations? A. This Medicare supplement plan will cover all your out-of-pocket expenses associated with hospitalization. B. This plan is standardized across all insurance companies in Alabama, so the benefits are the same regardless of which company you choose. C. Medicare supplement plans can help bridge the gap in coverage that original Medicare doesn't address. D. Since you're turning 65 soon, this is the perfect time to enroll in a Medicare supplement plan. The correct answer is A. This Medicare supplement plan will cover all your out-of-pocket expenses associated with hospitalization. The Alabama Department of Insurance enforces strict advertising regulations to prevent misleading statements regarding Medicare supplement insurance. Misrepresenting benefits. It's prohibited to guarantee coverage of all out-of-pocket expenses. Medicare supplement plans are standardized by federal guidelines, but they have different benefit levels with varying cost-sharing requirements. Question 78. An Alabama resident is applying for a health insurance policy. During the application process, they disclose a pre-existing medical condition. According to Alabama's health insurance reforms, which of the following statements is true regarding the use of this information by the health insurer? A. The health insurer can deny coverage based solely on the pre-existing condition. B. The health insurer can impose pre-existing condition exclusions that limit coverage for the specific condition. C. The health insurer can charge a higher premium based on the pre-existing condition, but they cannot deny or limit coverage. D. There are no restrictions on how a health insurer can use information about pre-existing conditions. The correct answer is C. The health insurer can charge a higher premium based on the pre-existing condition, but they cannot deny or limit coverage. The Affordable Care Act, ACA, and subsequent reforms in Alabama prohibit health insurers from denying coverage or imposing pre-existing condition exclusions based on health status. However, insurers can consider health factors for rating purposes, allowing them to adjust premiums based on an applicant's health status, including pre-existing conditions. This practice is regulated to prevent excessive rate increases. Question 79. Ms. Davis is a resident of Alabama and is considering purchasing a group health insurance policy through her employer. The employer offers several plans with different benefit structures. According to the Alabama Department of Insurance regulations, which of the following statements is accurate regarding group health insurance policies in Alabama? A. Employers can deny coverage to employees with pre-existing conditions under group health plans. B. All group health insurance plans offered by employers in Alabama must cover mental health services. C. Employers are required to offer at least one health insurance plan to their employees. D. COBRA continuation coverage is only available for individuals who lose their job due to termination. The correct answer is D. COBRA continuation coverage is only available for individuals who lose their job due to termination. The Employee Retirement Income Security Act, ERISA, sets minimum standards for group health plans, and Alabama follows these guidelines. Pre-existing condition exclusion. ERISA prohibits group health plans from denying coverage or imposing pre-existing condition exclusions based on health factors. Mental health coverage. There is no federal mandate for mental health coverage in group health plans. However, Alabama adopted mental health parity laws requiring most group health plans to offer coverage for mental health services that is comparable to coverage for medical and surgical services. Employer obligation. ERISA does not require employers to offer health insurance, but Alabama has no additional regulations mandating employer-sponsored health plans. COBRA continuation. COBRA, Consolidated Omnibus Budget Reconciliation Act, allows qualified individuals to continue group health coverage following certain qualifying events, including involuntary termination of employment, other than for gross misconduct. Question 80. Mr. Brown is a licensed accident and health insurance agent in Alabama and is explaining disability income insurance options to a client. While discussing benefit payouts, which of the following statements by Mr. Brown would be most accurate regarding the calculation of benefits under a disability income insurance policy in Alabama? A. The benefit amount is always a flat percentage of the insured's income. B. The benefit amount is determined solely by the specific occupation listed on the policy. C. The benefit amount is calculated based on the insured's income and the definition of disability outlined in the policy. D. Mental illness is never considered a valid reason for claiming disability benefits under Alabama insurance regulations. The correct answer is C. The benefit amount is calculated based on the insured's income and the definition of disability outlined in the policy. Disability income insurance policies in Alabama define the benefit amount and the conditions for claiming benefits within the policy contract. Benefit calculation. The policy will specify a percentage of the insured's income, e.g., 60%, to be paid as a monthly benefit in case of disability. Disability definition. The policy defines what constitutes a disability, often with different categories: own occupation, any occupation. Benefits are only payable if the insured meets the specific definition of disability outlined in the policy. Mental illness. Most disability income insurance policies in Alabama cover disabilities caused by mental illness, as long as the insured meets the policy's definition of disability. Question 81. An Alabama resident is applying for a life insurance policy. They are unsure how to answer the question about beneficiary designation. According to Alabama law, how does designating a beneficiary impact the life insurance policy proceeds? A. The beneficiary has no legal right to the death benefit. It becomes part of the policyholder's estate. B. The death benefit automatically passes to the policyholder's spouse regardless of the designated beneficiary. C. The designated beneficiary has a legal right to receive the death benefit, but creditors of the deceased policyholder may still have claims against the proceeds. D. Designating a beneficiary is optional, and if no beneficiary is named, the death benefit becomes payable to the state of Alabama. The correct answer is C. The designated beneficiary has a legal right to receive the death benefit, but creditors of the deceased policyholder may still have claims against the proceeds. Beneficiary designation is a crucial aspect of life insurance policies in Alabama. Beneficiary rights. A named beneficiary has a legal right to receive the death benefit upon the policyholder's death, bypassing the probate process. Creditor claims. While beneficiary designation generally protects the death benefit from becoming part of the estate, certain exceptions exist. Creditors of the deceased policyholder may have claims against the death benefit if the policy was used as collateral for a loan or if premiums were paid with fraudulent transfers. Question 82. Ms. Hernandez is a senior citizen residing in Alabama and is enrolled in a Medicare Advantage plan, Part C. She is unhappy with the customer service she has received from her current Medicare Advantage provider. According to Alabama regulations, what are Ms. Hernandez's options regarding her Medicare Advantage plan? A. She cannot switch to a different Medicare Advantage plan during the current plan year. B. She can disenroll from her current Medicare Advantage plan and return to original Medicare during a specific disenrollment period. C. She is required to file a formal complaint with the insurance company before making any changes to her plan. D. There are no restrictions on switching between Medicare Advantage plans throughout the year in Alabama. The correct answer is B. She can disenroll from her current Medicare Advantage plan and return to original Medicare during a specific disenrollment period. Medicare Advantage plans offer an alternative way to receive Medicare benefits through private insurance companies. Alabama follows federal guidelines established by the Centers for Medicare and Medicaid Services, CMS, regarding disenrollment from Medicare Advantage plans. Disenrollment window. Ms. Hernandez has the right to disenroll from her Medicare Advantage plan during the Medicare Advantage open enrollment period, usually October 15th to December 7th, each year. This allows her to switch to original Medicare or another Medicare Advantage plan effective the following January 1st. Guaranteed access. During the disenrollment window, Ms. Hernandez will have guaranteed access to original Medicare, meaning she cannot be denied coverage based on health status. Complaint process. While filing a complaint with the insurance company or Medicare is an option, it is not mandatory before disenrolling from a Medicare Advantage plan. Question 83. Mr. Khan is a life insurance agent licensed in Alabama and is presenting different universal life insurance products to a client. While explaining policy features, Mr. Khan should clarify that universal life insurance policies in Alabama differ from traditional whole life insurance policies in which aspect? A. Universal life insurance policies offer a guaranteed minimum death benefit, while whole life insurance does not. B. Universal life insurance premiums are typically fixed, whereas whole life insurance premiums can vary. C. Universal life insurance policies allow for flexibility in premium payments and death benefit amounts, unlike whole life insurance. D. Universal life insurance policies are not subject to state premium taxes, while whole life insurance policies are. The correct answer is C. Universal life insurance policies allow for flexibility in premium payments and death benefit amounts, unlike whole life insurance. Both universal life and whole life insurance offer permanent life insurance coverage and accumulate cash value. However, they differ in terms of flexibility. Premium and death benefit flexibility. Universal life insurance policies offer adjustable premiums and the ability to change the death benefit within certain limits. Policyholders can pay higher premiums to increase the cash value or death benefit, or pay lower premiums as long as they are sufficient to maintain the policy. Guaranteed premiums. Whole life insurance typically has fixed premiums that remain level throughout the policy term. The death benefit is also guaranteed to grow at a predetermined rate. Note: state premium taxes may apply to both universal life and whole life insurance policies in Alabama. Question 84. Ms. Lopez is a resident of Alabama and is considering purchasing a critical illness insurance policy. While researching different plans, she comes across a policy with an exclusion for a specific critical illness. According to the Alabama Department of Insurance regulations, what is most important for Ms. Lopez to understand regarding such exclusions? A. Critical illness insurance policies in Alabama cannot exclude any specific critical illnesses. B. Exclusions for critical illnesses must be clearly and conspicuously outlined in the policy wording. C. Ms. Lopez cannot waive any critical illness exclusions within the policy. D. The Alabama Department of Insurance requires all critical illness insurance policies to cover a specific set of critical illnesses. The correct answer is B. Exclusions for critical illnesses must be clearly and conspicuously outlined in the policy wording. Critical illness insurance policies in Alabama are not standardized, and insurers have flexibility in policy design. However, the Alabama Department of Insurance mandates specific requirements for policy clarity. Exclusion transparency. Exclusions for critical illnesses must be clearly and prominently displayed in the policy document. This ensures Ms. Lopez understands what conditions are not covered by the policy. Waiver option. While not mandatory, some critical illness insurance policies may allow Ms. Lopez to pay an additional premium to waive certain exclusions. Question 85. Mr. Garcia is a licensed accident and health insurance agent in Alabama and is explaining individual health insurance options to a client. While discussing health insurance marketplaces, which of the following statements by Mr. Garcia would be the least accurate regarding the Alabama marketplace, marketplace.healthcare.gov? A. The Alabama Marketplace is a platform where individuals can compare and shop for qualified health plans that meet minimum essential coverage standards. B. Eligibility for premium subsidies on the Alabama Marketplace is based on household income and family size. A. Individuals can enroll in a qualified health plan through the Alabama Marketplace during a specific enrollment period each year. D. Short-term health insurance plans are available for purchase on the Alabama Marketplace. The correct answer is D. Short-term health insurance plans are available for purchase on the Alabama Marketplace. The Alabama Marketplace, a federally facilitated marketplace under the Affordable Care Act, ACA, offers qualified health plans that meet minimum essential coverage standards. Plan options. Individuals can compare and shop for various qualified health plan options through the marketplace, including HMOs, PPOs, and EPOs. Subsidy eligibility. The ACA provides premium tax credits to eligible individuals and families based on their income to help with the cost of qualified health plans purchased on the marketplace. Enrollment period. A specific open enrollment period is designated each year for individuals to enroll in or change their qualified health plans on the marketplace. Plan exclusion. Short-term health insurance plans, which typically offer limited coverage and may not be renewable, are not available for purchase through the Alabama marketplace. Question 86. Ms. Clark is an agent licensed to sell accident and health insurance in Alabama. She is contacted by a client who wants to cancel their individual health insurance policy. According to Alabama regulations, what factors should Ms. Clark explain to the client regarding individual health insurance policy cancellations? A. Individual health insurance policies in Alabama cannot be canceled by the policyholder after the initial enrollment period. B. Cancellations are always effective immediately upon notification to the insurance company. B. Ms. Clark is required to report the cancellation to the Alabama Department of Insurance. D. COBRA continuation coverage may be an option for the client if they are losing coverage due to a qualifying event. The correct answer is D. COBRA continuation coverage may be an option for the client if they are losing coverage due to a qualifying event. While individual health insurance policies in Alabama generally allow for cancellation, there are important considerations. Cancellation right. Policyholders typically have the right to cancel their individual health insurance policies at any time. However, there may be financial implications, such as a short-rate cancellation fee. Cancellation effective date. The effective date of cancellation may vary depending on the insurance company's policy. It's not always immediate upon notification. COBRA option. Under COBRA, qualified individuals who lose their health insurance due to certain events, e.g., involuntary termination of employment, can elect to continue coverage under the group health plan by paying the full premium cost. Ms. Clark should inform the client about COBRA as a potential option to avoid a coverage gap. Question 87. Ms. Jones is a resident of Alabama and is applying for a health insurance policy. She has a pre-existing medical condition. According to the Alabama Department of Insurance regulations and the Affordable Care Act, ACA, which of the following statements is true regarding how the health insurance company can handle her application? A. The health insurance company can deny coverage based solely on her pre-existing condition. B. The health insurance company can impose a pre-existing condition exclusion that limits coverage for her specific condition. C. The health insurance company can charge a higher premium based on her pre-existing condition, but they cannot deny or limit coverage. D. Ms. Jones is ineligible for any health insurance coverage in Alabama due to her pre-existing condition. The correct answer is C. The health insurance company can charge a higher premium based on her pre-existing condition, but they cannot deny or limit coverage. The ACA and subsequent reforms in Alabama prohibit health insurers from denying coverage or imposing pre-existing condition exclusions based on health status. However, insurers can consider health factors for rating purposes, allowing them to adjust premiums based on an applicant's health status, including pre-existing conditions. This practice is regulated to prevent excessive rate increases. Question 88. Mr. Brown is a life insurance agent licensed in Alabama and is presenting different term life insurance products to a client. While explaining policy features, Mr. Brown should clarify that term life insurance differs from whole life insurance in which aspect? A. Term life insurance offers a guaranteed death benefit throughout the entire policy term, whereas whole life insurance does not. B. Term life insurance policies accumulate cash value that can be withdrawn or borrowed against, unlike whole life insurance. C. Term life insurance provides coverage for a specific period, term, while whole life insurance offers lifetime coverage. D. Term life insurance premiums are typically level throughout the policy term, whereas whole life insurance premiums increase over time. The correct answer is C. Term life insurance provides coverage for a specific period, term, while whole life insurance offers lifetime coverage. Term life insurance offers coverage for a specific period, e.g., 10, 20, or 30 years, at a relatively lower premium compared to whole life insurance. If the insured person dies within the term, the death benefit is paid to the beneficiary. However, term life insurance does not accumulate cash value. Whole life insurance, on the other hand, provides lifetime coverage as long as premiums are paid. It also builds cash value over time, which can be accessed through loans or withdrawals. The premiums for whole life insurance are typically higher than term life insurance but remain level throughout the policy. Question 89. An Alabama resident is considering purchasing a Medicare supplement insurance policy, Medigap, to help cover out-of-pocket expenses associated with original Medicare. According to Alabama regulations, which of the following statements is false regarding Medigap policies? A. Medigap policies are standardized by federal guidelines, so the benefits offered are essentially the same across different insurance companies in Alabama. B. Individuals can enroll in a Medigap policy at any time during the year. B. There are limitations on how many Medigap plans an individual can purchase in Alabama. D. Medigap premiums can vary depending on the insurance company, age, and plan benefits chosen. The correct answer is B. Individuals can enroll in a Medigap policy at any time during the year. Medigap policies are standardized by federal guidelines with different plan options, A, B, C, D, etc., offering varying levels of coverage for deductibles, co-insurance, and other out-of-pocket expenses under original Medicare. Enrollment period. There is a specific enrollment window, typically 6 months following the first month an individual is both enrolled in Part B of Medicare and age 65 or older, to enroll in a Medigap plan without facing potential medical underwriting. Outside this window, medical underwriting may be used, which could result in higher premiums or denial of coverage based on health status. Plan limits. An individual can only purchase one Medigap plan at a time. Question 90. Mr. Jones is a resident of Alabama and wants to purchase a long-term care insurance policy. According to Alabama's mandated benefits for long-term care insurance, which of the following services is not required to be covered by all policies? A. Home health care. B. Adult day care. C. Hospice care. D. Nursing home care. The correct answer is C. Hospice care. Alabama Department of Insurance, ALDOI, mandates specific benefits for all long-term care insurance policies sold in the state. While hospice care is a valuable service for terminally ill patients, it is not included in the mandated benefits package. The mandated benefits include home health care, nursing home care, adult day care, residential care in an assisted living facility. Therefore, option C is incorrect. Hospice care may be offered as an optional rider on some policies, but it's not required by Alabama law. Question 91. Ms. Lee is a life insurance agent licensed in Alabama. A client expresses interest in a universal life insurance policy. Which of the following statements accurately describes how premiums work in a universal life policy according to Alabama regulations? A. Premiums are fixed for the entire policy term. B. Premiums can be adjusted by the policyholder within certain limits, but death benefit will also be adjusted accordingly. C. Premiums are calculated based on the insured's age and health at the time of application and cannot be changed. D. A portion of the premium goes towards the death benefit, and the remaining amount accumulates tax deferred in a cash value account, but the policyholder has no control over premium payments. The correct answer is B. Premiums can be adjusted by the policyholder within certain limits, but death benefit will also be adjusted accordingly. Universal life insurance policies offer flexibility in premium payments within certain limits set by the insurer. Alabama regulations allow policyholders to adjust their premiums based on their needs and financial situation. However, these adjustments may affect the death benefit amount or the cash value accumulation rate. Option A is incorrect for universal life, while C is true for some traditional whole life policies. Option D partially describes how cash value accumulates but doesn't reflect the policyholder's control over premiums. Question 92. An Alabama resident is diagnosed with a pre-existing medical condition. They are concerned about their ability to obtain health insurance. According to the Alabama Affordable Care Act, ACA, marketplace rules, which of the following statements is true? A. Insurance companies can deny coverage based on pre-existing conditions. B. The applicant will be placed into a high-risk pool with significantly higher premiums. C. Pre-existing conditions cannot be used to deny coverage or charge higher premiums. D. The applicant will be eligible for a premium subsidy only if they have a pre-existing condition. The correct answer is C. Pre-existing conditions cannot be used to deny coverage or charge higher premiums. The ACA, including the health insurance marketplace in Alabama, prohibits insurance companies from denying coverage or charging higher premiums based on pre-existing conditions. This provision ensures people with health conditions can access affordable health insurance. Options A, B, and D describe practices that were common before the ACA but are no longer allowed. Question 93. An insurance agent in Alabama is marketing a Medicare supplement policy to a senior citizen. According to Alabama regulations, which of the following statements is most important for the agent to disclose about Medicare supplement policies? A. The policy covers all out-of-pocket expenses associated with Medicare. B. Medicare supplement policies are mandatory for all Medicare beneficiaries. C. These policies can help pay for deductibles, coinsurance, and copayments associated with original Medicare. D. There are no limitations or exclusions on coverage provided by Medicare supplement policies. The correct answer is C. These policies can help pay for deductibles, coinsurance, and copayments associated with original Medicare. Medicare supplement policies, also known as Medigap plans, are designed to help beneficiaries with out-of-pocket costs associated with original Medicare, Parts A and B. They do not cover everything, and Alabama regulations require agents to disclose this clearly. Option A is misleading, B is incorrect as they are optional, and D is not true as there can be exclusions based on the specific plan. Question 94. A health insurance company in Alabama receives an application for an individual health insurance policy. The applicant has a history of substance abuse. Under Alabama's Fair Access to Insurance requirements, FAIR Plan, which of the following statements is true regarding the company's ability to underwrite the application? A. The company can deny coverage based solely on the applicant's history of substance abuse. B. The company can offer the applicant a policy with a higher premium but cannot deny coverage entirely. C. The company must automatically approve the application and cannot impose any additional underwriting conditions. D. The FAIR Plan only applies to high-risk businesses, not individual applicants. The correct answer is B. The company can offer the applicant a policy with a higher premium but cannot deny coverage entirely. The Alabama FAIR Plan is a program that ensures access to essential health insurance for individuals who may have difficulty getting coverage due to pre-existing conditions, including substance abuse. While the company cannot deny coverage entirely, they can offer a policy with a higher premium based on the applicant's health risk. Options A and C are not allowed under the FAIR Plan, and D misrepresents the program's purpose. Question 95. Ms. Hernandez is a resident of Alabama and is considering purchasing a life insurance policy with a graded death benefit rider. According to Alabama insurance regulations, what is a key feature of a graded death benefit rider? A. The death benefit remains level throughout the entire policy term. B. The death benefit increases over time, typically at a predetermined rate. C. The death benefit decreases over time, often used for policies designed to pay off a mortgage. D. The death benefit payout is contingent upon the cause of death, e.g., accidental death. The correct answer is C. The death benefit decreases over time, often used for policies designed to pay off a mortgage. A graded death benefit rider is an attachment to a life insurance policy that alters the payout structure. In Alabama, a common type of graded rider is a decreasing term benefit rider. This rider reduces the death benefit over time, often used to pay off a declining mortgage balance. Option A describes a level death benefit, not a graded rider. Option B is possible with some riders but not typical for decreasing term riders. Option D describes an accidental death benefit rider, a different product altogether. Question 96. An agent in Alabama is explaining disability income insurance options to a client. Which of the following statements is most accurate regarding the definition of disability under most disability income policies in Alabama? A. Disability is defined solely as the inability to perform the specific duties of the insured's current occupation. B. Disability is defined broadly as the inability to perform any gainful work due to illness or injury. C. There is a standardized definition of disability used by all disability income insurers in Alabama. D. The definition of disability is determined solely by the attending physician of the insured. The correct answer is B. Disability is defined broadly as the inability to perform any gainful work due to illness or injury. Most disability income policies in Alabama use a own occupation or any occupation definition of disability. Own occupation benefits are paid if the insured cannot perform their specific occupation due to illness or injury. Any occupation benefits are paid if the insured cannot perform any work for which they are reasonably qualified due to illness or injury. Option A reflects only own occupation definition. C is not true as there are variations, and D gives too much power to the physician without considering the policy terms. Question 97. Mr. Garcia is an agent selling accident and health insurance policies in Alabama. He is explaining the concept of guaranteed issue to a potential client. According to Alabama regulations, which of the following statements is true regarding guaranteed issue for health insurance policies? A. Guaranteed issue is available to all applicants regardless of age or health status. B. Guaranteed issue is only applicable to specific types of health insurance, such as Medicare supplement plans. C. Alabama does not have any guaranteed issue requirements for health insurance. D. Guaranteed issue allows policyholders to renew their policies without medical underwriting. The correct answer is B. Guaranteed issue is only applicable to specific types of health insurance, such as Medicare supplement plans. Guaranteed issue in Alabama applies to specific types of health insurance policies, not all plans. For example, some states require guaranteed issue for individual health insurance policies issued to children or for specific mandated benefits plans. However, it is not generally applicable to most adult individual health plans. Option A is too broad, C is incorrect, and D refers to renewability, not guaranteed issue. Question 98. An Alabama consumer receives a cancellation notice for their individual health insurance policy. According to the Alabama Department of Insurance, ALDOI, regulations, which of the following reasons would be most likely considered a valid reason for the insurer to cancel the policy? A. The policyholder has filed too many claims in the past year. B. The policyholder has reached the age of 65 and becomes eligible for Medicare. C. The insurer is withdrawing the specific policy from the market in Alabama. D. The policyholder has not paid their premiums on time. The correct answer is D. The policyholder has not paid their premiums on time. ALDOI regulations allow insurance companies to cancel individual health insurance policies for specific reasons. Non-payment of premium is a common and valid reason for cancellation. Option A might be used for rate adjustments but not necessarily cancellation. Option B is not a reason for cancellation, and C may require following specific procedures before terminating existing policies. Question 99. Ms. Davis is a life insurance agent in Alabama and is presenting a Variable Universal Life Insurance (VUL) policy to a client. Which of the following statements accurately describes the role of investment risk in VUL policies? A. VUL policies offer a guaranteed death benefit regardless of the performance of the underlying investments. B. The policyholder has no control over the investment options within a VUL policy. C. Investment risk in VUL policies solely affects the cash value accumulation, not the death benefit. D. VUL policies are similar to whole life insurance with a fixed interest rate on the cash value. The correct answer is C. Investment risk in VUL policies solely affects the cash value accumulation, not the death benefit. Variable Universal Life Insurance combines life insurance protection with a variable investment component. The cash value grows based on the performance of the chosen investment options. Policyholders have some control over these choices. However, unlike whole life with a fixed interest rate, investment risk in VUL policies can impact the cash value accumulation but not the guaranteed death benefit. Option A is true, B is not always the case, and D describes whole life, not VUL. Question 100. An Alabama resident is considering a health insurance policy with a limited expense health benefit rider. What is the primary purpose of this type of rider according to Alabama insurance regulations? A. To provide coverage for specific services not included in the main health insurance policy, such as vision or dental care. B. To act as a secondary policy that pays for expenses after the primary policy reaches its out-of-pocket maximum. C. To offer a fixed dollar benefit in case of hospitalization or a specific illness. D. To lower the overall premium cost of the health insurance policy by increasing the deductible. The correct answer is C. To offer a fixed dollar benefit in case of hospitalization or a specific illness. Limited expense health benefit riders in Alabama typically offer a fixed dollar benefit upon hospitalization or diagnosis of a specific illness. This benefit is paid regardless of other insurance coverage and can help offset out-of-pocket expenses. Option A describes supplemental benefits, B describes excess coverage riders, and D describes how high deductible plans work, not riders. Question 101. An insurance company in Alabama receives an application for a group health insurance policy from a small employer. According to Alabama's mandated health insurance benefits, which of the following statements is true regarding the availability of coverage for the employer's employees? A. The insurance company can deny coverage to the entire group based on the health status of individual employees. B. All small employers in Alabama are required to offer health insurance to their employees. C. The mandated benefits apply only to individual health insurance policies, not group plans. D. The insurance company can offer the group a policy with limited benefits to comply with the state mandate. The correct answer is C. The mandated benefits apply only to individual health insurance policies, not group plans. Alabama does not currently have a mandate requiring employers to offer health insurance. However, There are mandated benefits for health insurance policies sold in the state, which apply to both individual and group plans. Option A is prohibited under group health policies, B is not a current requirement, and D, while plans can have variations, they must still meet the mandated benefit requirements. Question 102. An agent in Alabama is explaining the concept of replacement of life insurance to a client considering a new policy. According to the Alabama Department of Insurance, ALDOI, regulations, which of the following actions by the agent would most likely be considered a violation of replacement rules? A. Briefly mentioning the benefits of the new policy compared to the existing one. B. Obtaining a copy of the client's existing policy illustration for comparison purposes. C. Encouraging the client to lapse their current policy to qualify for a lower premium on the new policy. D. Highlighting the different features and riders available on the new policy. The correct answer is C. Encouraging the client to lapse their current policy to qualify for a lower premium on the new policy. ALDOI replacement regulations aim to prevent unfair practices when replacing existing life insurance policies. Encouraging lapse, cancellation due to non-payment, of the current policy to qualify for a new one is a violation. Options A, B, and D are allowed as long as the agent presents information fairly and accurately. Question 103. A health insurance company in Alabama receives a claim for a mental health service. According to the Alabama Mental Health Parity Act, which of the following statements is most accurate regarding coverage for mental health services? A. Mental health benefits must exactly mirror the coverage provided for physical health services. B. Insurers can impose stricter annual or lifetime dollar limits on mental health benefits. C. Mental health services are completely excluded from coverage mandated by Alabama insurance regulations. D. There are no specific requirements for mental health coverage under Alabama insurance regulations. The correct answer is B. Insurers can impose stricter annual or lifetime dollar limits on mental health benefits. The Alabama Mental Health Parity Act prohibits insurers from imposing more restrictive financial requirements on mental health benefits compared to medical, surgical benefits. However, the Act allows insurers to set annual or lifetime dollar limits on both types of coverage, as long as the limits are comparable. Options A, C, and D are not accurate representations of the Act. Question 104. Ms. Brown is a resident of Alabama and is considering a Medicare Advantage (MA) plan. According to Alabama regulations, which of the following statements is true regarding Medicare Advantage plans? A. Beneficiaries can have both a Medicare Advantage plan and a Medigap supplement plan. B. Medicare Advantage plans are a type of Medigap supplement plan offered by private insurers. C. Beneficiaries are automatically enrolled in a Medicare Advantage plan upon reaching eligibility for Medicare. D. Medicare Advantage plans only cover hospitalization costs under Part A of Original Medicare. The correct answer is A. Beneficiaries can have both a Medicare Advantage plan and a Medigap supplement plan. Medicare Advantage plans, offered by private insurers approved by Medicare, provide an alternative way to receive Medicare benefits, Parts A and B. Beneficiaries in Alabama can choose an MA plan instead of relying solely on Original Medicare. Additionally, under certain circumstances, beneficiaries can have both a Medicare Advantage plan and a Medigap supplement plan to fill coverage gaps in the MA plan. Options B, C, and D are not true statements about Medicare Advantage plans. Question 105. An agent in Alabama is contacted by a client who wants to cancel their disability income insurance policy. According to Alabama regulations, what is most likely true regarding the policyholder's right to cancel a disability income insurance policy? A. The policy can only be canceled during a specific enrollment period. B. The insurer can deny the cancellation request without justification. B. The policyholder has an unconditional right to cancel the policy at any time, with a full premium refund. D. Cancellation is only allowed if the policyholder can demonstrate a reason for no longer needing coverage. The correct answer is A. The policy can only be canceled during a specific enrollment period. While most insurance policies allow for cancellation, disability income insurance policies in Alabama often have specific cancellation terms. These might include limitations on when cancellation is allowed, such as during a policy renewal period. Option B is not typical, C is not always true, especially for premium refunds, and D is not a general requirement. Question 106. A health insurance company in Alabama is developing a new individual health insurance plan. According to the Affordable Care Act, ACA, essential health benefit requirements, which of the following services must be covered by the new plan? A. Cosmetic surgery. B. Vision care for adults, excluding emergencies. C. Prescription drug coverage, excluding over-the-counter medications. D. Long-term care services provided at home. The correct answer is C. Prescription drug coverage, excluding over-the-counter medications. The ACA established essential health benefits that most individual and small group health insurance plans must cover. Prescription drug coverage, excluding over-the-counter medications, is one of the essential health benefits. Options A, B, and D are not currently mandated benefits under the ACA for individual plans, although some plans may offer them as optional riders. Question 107. Mr. Chen is an agent in Alabama who sells accident insurance. Which of the following statements is most accurate regarding the role of accident insurance in Alabama? A. Accident insurance is a substitute for health insurance and can replace a major medical plan. B. Accident insurance provides benefits only in case of death caused by an accident. C. Accident insurance supplements health insurance by covering specific expenses incurred due to an accident. D. Accident insurance is a mandatory coverage for all residents of Alabama. The correct answer is C. Accident insurance supplements health insurance by covering specific expenses incurred due to an accident. Accident insurance is a limited benefit policy that pays benefits in case of an accidental injury or death. It is not a substitute for comprehensive health insurance. Option A is incorrect, B is too narrow, and D is not true. Accident insurance can provide financial assistance for specific expenses related to the accident, such as emergency room visits, hospitalization costs, or lost wages due to disability caused by the accident. It works alongside health insurance to help manage financial burdens after an accident. Question 108. An Alabama resident is considering purchasing a critical illness insurance policy. According to Alabama insurance regulations, what is a key characteristic of a critical illness insurance policy? A. It provides a death benefit only if the death is caused by a specific critical illness. B. It pays a lump sum benefit upon diagnosis of a covered critical illness, regardless of medical expenses. C. It functions similarly to a disability income insurance policy, offering income replacement during illness. D. It is a rider that can be attached to a life insurance policy to increase the death benefit. The correct answer is B. It pays a lump sum benefit upon diagnosis of a covered critical illness, regardless of medical expenses. Critical illness insurance is a specific type of health insurance that provides a lump sum benefit upon diagnosis of a covered critical illness, such as cancer, heart attack, or stroke. This benefit can be used to help cover medical expenses, lost income, or other financial needs arising from the illness. Option A is incorrect as it applies to specific life insurance riders, C describes disability income insurance, and D describes an accidental death benefit rider. Question 109. An agent in Alabama is explaining the concept of agent errors and omissions, E&O, insurance to a fellow agent. Which of the following statements accurately describes the primary purpose of E&O insurance for insurance agents? A. It covers the agent's professional liability in case of property damage caused to a client. B. It reimburses the agent for any financial losses incurred due to bad investments recommended to clients. C. It provides financial protection for the agent in case of legal action arising from errors or omissions made while performing their duties. D. It safeguards the agent's personal assets in case of a lawsuit filed by a policyholder's beneficiary. The correct answer is C. It provides financial protection for the agent in case of legal action arising from errors or omissions made while performing their duties. Errors and omissions, E&O, insurance is professional liability insurance designed specifically for insurance agents. It protects the agent financially if they are sued due to errors, omissions, or negligence committed while performing their duties. These errors or omissions could involve misrepresenting a policy, failing to advise a client appropriately, or neglecting to follow proper procedures. Option A is not typical coverage for E&O, B is not the agent's responsibility, and D might be covered by a different type of insurance. Question 110. An Alabama health insurance company receives an application for a health insurance policy from a young adult. The applicant recently aged off their parents' employer-sponsored health plan. According to the Affordable Care Act, ACA, provisions, which of the following statements is true regarding the young adult's ability to obtain coverage? A. The health insurance company can deny coverage based on the young adult's pre-existing health conditions. B. The young adult can remain on their parents' plan until they reach age 26, regardless of employment status. C. The young adult qualifies for a special enrollment period to obtain coverage outside the open enrollment window. D. There are no specific provisions under the ACA for young adults transitioning off of parents' plans. The correct answer is C. The young adult qualifies for a special enrollment period to obtain coverage outside the open enrollment window. The ACA allows young adults to stay on their parents' employer-sponsored health plan until age 26, regardless of their employment status. Additionally, under the ACA's dependent coverage provision, if a young adult ages off their parents' plan, they qualify for a special enrollment period to obtain individual health insurance coverage outside the open enrollment window. Options A, B, and D are not accurate representations of the ACA provisions for young adults. Question 111. Ms. Lopez is a resident of Alabama considering a cancer insurance policy. How does a cancer insurance policy typically differ from a critical illness insurance policy offered in Alabama? A. Cancer insurance only pays a benefit upon diagnosis, while critical illness offers benefits throughout treatment. B. Critical illness insurance covers a wider range of conditions compared to cancer insurance. C. Cancer insurance policies are regulated by the federal government, unlike critical illness insurance. D. There is no practical difference. Cancer insurance is simply another term for critical illness insurance. The correct answer is B. Critical illness insurance covers a wider range of conditions compared to cancer insurance. Both cancer insurance and critical illness insurance are supplemental health policies. However, there is a key difference in their coverage scope. Critical illness insurance covers a defined set of critical illnesses, which may include cancer along with other conditions like heart attack, stroke, or organ failure. Cancer insurance, on the other hand, focuses specifically on cancer diagnosis and treatment. Option A might be true for some plans, but not always. Option C is incorrect. Both are regulated by state insurance departments. Option D is not accurate. Question 112. An insurance company in Alabama is reviewing an application for a long-term care insurance policy. According to Alabama regulations, which of the following factors would be most relevant in determining the appropriate premium for the applicant? A. The applicant's occupation and current income level. B. The applicant's age and health status at the time of application. C. The applicant's designated beneficiary for the policy. D. The applicant's preferred long-term care facility, nursing home, assisted living. The correct answer is B. The applicant's age and health status at the time of application. The primary factors used to determine the premium for a long-term care insurance policy in Alabama are the applicant's age and health status. Younger and healthier applicants typically qualify for lower premiums compared to older applicants or those with pre-existing health conditions that may increase the likelihood of needing long-term care. Option A might influence insurability but not necessarily premium rates. Option C is not relevant for premium calculation, and D might influence benefit payout but not premium amounts. Question 113. An agent in Alabama is contacted by a client who wants to file a grievance against their health insurance company. According to Alabama Department of Insurance, ALDOI, guidelines, which of the following statements is true regarding the grievance process? A. The agent is responsible for filing the grievance on the client's behalf. B. The client must first attempt to resolve the issue directly with the insurance company. A. Grievances can only be filed electronically through the ALDOI website. D. There is no formal grievance process. Clients can only sue the insurance company in court. The correct answer is B. The client must first attempt to resolve the issue directly with the insurance company. The Alabama Department of Insurance, ALDOI, encourages policyholders to attempt to resolve issues directly with their insurance company first. If the issue remains unresolved, the client can then file a formal grievance with the ALDOI. Option A is not the agent's responsibility, C might be an option but not the only one, and D is not accurate. The ALDOI provides a grievance process for consumers to address problems with their insurance companies. Question 114. An Alabama resident is considering a guaranteed renewable (GR) term life insurance policy. What is a key characteristic of a guaranteed renewable term life insurance policy? A. The death benefit remains level throughout the entire policy term, but the premium increases with age. B. The policy can be canceled by the insurance company at any time, but the premiums are guaranteed to remain level. C. The policy renews automatically for a specified term period, with guaranteed level premiums and insurability. D. The death benefit and premium are both guaranteed to remain level throughout the entire policy term. The correct answer is C. The policy renews automatically for a specified term period, with guaranteed level premiums and insurability. Guaranteed renewable (GR) term life insurance offers a death benefit for a specific term, e.g., 10, 20, or 30 years. The key characteristic is that the policy renews automatically for each term period with premiums guaranteed to stay level, and the insurance company cannot deny renewal based on your health. Option A describes graded death benefit riders, B describes non-renewable term policies, and D describes whole life insurance. Question 115. An insurance company in Alabama is developing a new short-term health insurance plan. According to the Alabama Department of Insurance, ALDOI, regulations, which of the following statements is most accurate regarding short-term health insurance plans? A. Short-term health insurance plans can offer comprehensive coverage similar to major medical plans. B. These plans are intended to provide temporary coverage for limited durations, not as a substitute for major medical plans. C. Short-term health insurance plans are not subject to the same benefit mandates as major medical plans under the ACA. D. There are no limitations on the duration for which a short-term health insurance plan can be renewed in Alabama. The correct answer is B. These plans are intended to provide temporary coverage for limited durations, not as a substitute for major medical plans. Short-term health insurance plans in Alabama are designed to provide temporary coverage, typically lasting for a period of less than 12 months, with the possibility of renewal for a limited number of additional terms. They are not intended as a substitute for comprehensive health insurance offered by major medical plans. Option A is not typical, C is true, and D is not accurate. Renewals for short-term plans have limitations. Question 116. An agent in Alabama is explaining the concept of grace periods to a client considering a new life insurance policy. According to Alabama regulations, what is the purpose of a grace period in a life insurance policy? A. The grace period allows the policyholder to make a premium payment after the due date without penalty. B. The grace period is a specific timeframe during which the policyholder can cancel the policy and receive a full refund. C. The grace period determines the timeframe within which a beneficiary must file a claim after the insured's death. D. The grace period allows the insurance company to investigate the cause of death before paying out the benefit. The correct answer is A. The grace period allows the policyholder to make a premium payment after the due date without penalty. A grace period in a life insurance policy is a set timeframe, typically 30 or 31 days, after the premium due date during which the policy remains in force. This allows the policyholder to make a late premium payment without the policy lapsing. Option B describes a free look period, not a grace period. Option C describes the timeframe for claim filing, and D is not the purpose of a grace period. Question 117. An Alabama consumer is interested in purchasing an individual health insurance policy but is concerned about pre-existing conditions. According to the Affordable Care Act, ACA, provisions, which of the following statements is true regarding pre-existing conditions and health insurance coverage? A. Health insurance companies can deny coverage or charge higher premiums based on an applicant's pre-existing conditions. B. The ACA allows for guaranteed issue of health insurance, meaning applicants cannot be denied coverage due to pre-existing conditions. C. The ACA provides a high-risk pool option for individuals with pre-existing conditions who cannot qualify for traditional health insurance. D. There are no federal regulations on how health insurance companies can handle pre-existing conditions. The correct answer is B. The ACA allows for guaranteed issue of health insurance, meaning applicants cannot be denied coverage due to pre-existing conditions. A key consumer protection under the ACA is the guaranteed issue provision. This prohibits health insurance companies from denying coverage or charging higher premiums based solely on an applicant's pre-existing conditions. Option A was possible before the ACA. Option C describes a program that existed before the ACA, and D is not accurate. Question 118. An agent in Alabama is explaining Medicare Supplement, Medigap, plans to a client. Which of the following statements is most accurate regarding Medigap plans? A. Medigap plans are a type of Advantage plan offered by Medicare itself. B. These plans are supplemental insurance policies designed to fill coverage gaps in Original Medicare, Parts A and B. C. Everyone enrolled in Medicare is automatically enrolled in a Medigap plan. D. Medigap plans cover expenses related to long-term care services provided at home or in a facility. The correct answer is B. These plans are supplemental insurance policies designed to fill coverage gaps in Original Medicare, Parts A and B. Medicare Supplement, Medigap, plans are standardized insurance policies sold by private companies that can help pay for out-of-pocket expenses associated with Original Medicare, Parts A and B, such as deductibles, coinsurance, and copays. Option A describes Medicare Advantage plans, C is not true, and D is not typically covered by Medigap plans. Question 119. A health insurance company in Alabama receives a claim for substance abuse treatment. According to the Mental Health Parity and Addiction Equity Act, MHPAEA, regulations, how should the company handle the claim compared to a claim for a medical condition? A. The insurance company can impose stricter annual or lifetime dollar limits on substance abuse treatment benefits. B. The MHPAEA requires the insurance company to process and pay out the claim following the same standards as for any other medical condition. C. The Act only applies to group health insurance plans, not individual plans offered in Alabama. D. The company can require the insured person to complete additional steps to qualify for substance abuse treatment benefits. The correct answer is B. The MHPAEA requires the insurance company to process and pay out the claim following the same standards as for any other medical condition. The Mental Health Parity and Addiction Equity Act, MHPAEA, prohibits health insurance companies from imposing more restrictive financial requirements on mental health or substance abuse treatment benefits compared to medical, surgical benefits. This means the claim for substance abuse treatment should be processed and paid out following the same standards as for any other covered medical condition under the terms of the health insurance plan. Option A is not allowed under MHPAEA, C applies nationwide, and D would violate the Act's non-discrimination provisions. Question 120. An agent in Alabama is working with a client who wants to increase their life insurance coverage. The client currently has a term life insurance policy that is about to expire. They are interested in a policy with a cash value component. Which of the following types of life insurance policies would be the most suitable option for the client's needs? A. Another term life insurance policy with a longer term. B. A whole life insurance policy. C. A universal life insurance policy. D. A variable universal life insurance policy. The correct answer is C. Universal life insurance policy. Term life insurance only provides a death benefit if the insured dies within the policy term and does not accumulate cash value. While the client could simply renew their current term life policy with a longer term, they specifically want a cash value component. Whole life insurance offers guaranteed death benefit and cash value growth over time. However, premiums for whole life are typically higher than for universal life. Universal life insurance provides flexible premiums and death benefit options while still accumulating cash value. The client can adjust their premium payments within certain limits to influence the cash value accumulation. This flexibility might be attractive for the client. Variable universal life insurance is a type of universal life where the cash value accumulation is linked to the performance of investment choices made by the policyholder. This can offer potentially higher returns but also comes with greater investment risk. The client's risk tolerance should be considered when choosing between universal life and variable universal life. Given the client's desire for both a death benefit and a cash value component, a universal life insurance policy offers a good balance of flexibility and growth potential. However, the final decision should be based on the client's specific needs, risk tolerance, and budget,